that shit getting high, ayy. Bitch, I'm going live, cause we do this all the time. Big 9, tell her how we ride, 40 pop your mind up, put that shit inside you. Purple hearts and roller coasters, I remind you. Broken hearts all on the posters, right beside you. Slow mo, I say baby slow it down for me. 808s, heartbreaks, check the sound for me, whoa. If that's your bitch, then why she down for me? And why she pulling up her top inside the crowd for me, whoa. I say baby slow it down for me. 808s, heartbreaks, check the sound for me, whoa. If that's your bitch, then why she down for me? And why she pulling up her top inside the crowd for me, whoa. Miss me, now she wanna kiss me. Get her out her clothes, now she touching where the blick be. Diss me, this 40 hole of 50. Acting like you 6 foot, Italy you 6 feet. Okay, now shorty slow it down for me. She my little queen bitch, so shorty hold a crown for me. Hey, if that's your bitch, then why she down for me? And why she pulling up her top inside the crowd for me? Tell her how we ride, 40 pop your mind up, put that shit inside you. Purple hearts and roller coasters, I remind you. Broken hearts all on the posters, right beside you. Slow mo, I say baby slow it down for me. 808s, heartbreaks, check the sound for me, whoa. If that's your bitch, then why she down for me? And why she pulling up her top inside the crowd for me, whoa. I say baby slow it down for me. 808s, heartbreaks, check the sound for me, whoa. If that's your bitch, then why she down for me? And why she pulling up her top inside the crowd for me, whoa.
I put that on my brothers, man, I'm never switching up. And shout out West Side, cause they always showing love. Let's fuck the other side, cause they know we coming up. And they acting tongue-tied when we say we pulling up. You say you was down to rise, so you gotta slide. It's a sacrifice, so no time for lies. It's do or die if you're trying to ride. And just hop aside, ooh, just hop aside. Tell me, do you feel? I'm tryna stack it, really make it big, so what's the deal? You say you 10 toes and you out here think you real. I got a couple shooters who gon' do it for the kill. Shout out Mo, cause he never giving up. He kept my head high even when I gave up. And I'm still thanking God for this life that we call love. And I'm still thanking God for this life that we call love. Cause I be real low if you was really with me. Might pop out in the cut if I'm feeling shiggy. New diamonds on my wrist and they feeling icky. And these bitches hit me up saying they feeling licky. Tryna feed my people make it out the fucking city. Then go hit the top and go and make a milli. Cause I been real low if you was really with me. Cause I been real low if you was really with me. I put that on my brothers, man, I'm never switching up. And shout out West Side, cause they always showing love. Let's fuck the other side, cause they know we coming up. And they acting tongue-tied when we say we pulling up. You say you was down to rise, so you gotta slide. It's a sacrifice, so no time for lies. It's do or die if you're trying to ride. And just hop aside, ooh, just hop aside. Tell me, do you feel? I'm tryna stack it, really make it big, so what's the deal? You say you 10 toes and you out here think you real. I got a couple shooters who gon' do it for the kill. The streets will get hard, one day you be broke, and then you on top, but you gotta stay strong, you never get lost. It's the key to stay woke, cause how we was raised, and we never got changed, Living in the project kinda changed us. Locked up us so felt like that they chained us. Double out of block, it be kinda dangerous. Day one, so I'm rolling with my day one. I put that on my brothers, man, I'm never switching up. And shout out West Side, cause they always showing love. Let's fuck the other side, cause they know we coming up. And they acting tongue-tied when we say we pulling up. You say you was down to rise, so you gotta slide. It's a sacrifice, so no time for lies. It's do or die if you're trying to ride. And just hop aside, ooh, just hop aside. Tell me, do you feel? I'm tryna stack it, really make it big, so what's the deal? You say you 10 toes and you out here think you real. I got a couple shooters who gon' do it for the kill. West side, it's 2 times.
Yeah, D-Roll. She a bad mamacita. See how she dance, she move the hips, I think I need her. She freaking them sheets for me. Hey baby, bend it all, we look good in them jeans. Only 2 drinks and she fiendin'. She a bad mamacita. See how she dance, she move the hips, I think I need her. She freaking them sheets for me. Hey baby, bend it all, we look good in them jeans. Only 2 drinks and she fiendin' for me. Keep dreaming. Hey, money on my mind, don't waste my time, bitch, I'm speeding. Niggas plot against me, but I know when they scheming. Bitch said they love me, but I don't believe it. Bitch said they love me, but can't get no reasons. Last bitch stole my heart, I knew it was treason. She wanna cuff me, I'm pushing the limits. In love with the money, in love with the women. Stop. What all that bullshit? All of my niggas, we be loading when we moving. I signed my first deal and buying my niggas Cubans. Breaking all these hearts, can't decide, I've been choosing. And she a bad mamacita. See how she dance, she move the hips, I think I need her. She a freak in her sheets for me. And baby, bend it all, we look good in them jeans. Only 2 drinks and she gave it to her once. She came back more than twice. I fucked her good, cut her off the next night, but she want more, want more. She need more, cause she addicted. She did me wrong and she try play the victim. Baby say she real, but she turn around and switched it. Got no trust, I ain't fucking with all these bitches. Way too many bloods, guys know they ain't doing shit. You can hit, she been ran through and I've been through it. I won't ever play the side. I ain't wanna make you cry. Way too many bloods, guys know they ain't doing shit. You can hit, she been ran through and I've been through it. I won't ever play the side. I ain't wanna make you cry. And she a bad mamacita. See how she dance, she move the hips, I think I need her. She a freak in her sheets for me. Hey baby, bend it all, you look good in them jeans. Only 2 drinks and she fiending for me. Hey, for me. Hey, D-Rock.
Hello. Welcome. Just give me a sec. The screen should be on. My Streamlabs is just not detecting. It's not detecting my trading view for some reason. It's right there. I hope it does. I'm on TradingView right now. It's just not opening. What the hell? Let me restart the trading view. Welcome to the 6 viewers. I did not expect people to actually join. I'm just kind of doing this because I've got some time in the morning. I'll be just breaking down what I usually would do with TradingView or analysis of the market, really. There we go. Now you can see my chart. That's perfect. And I believe that if you type anything, the I've never streamed before. I really apologize, but oh, there we go. It's a bit stretched out. Let me fix that. Check BTC. We can do that. Yeah, sure, we can do that. I think I called out a week ago or so. I called out Bitcoin when it entered a weekly gap. Oh yeah, look at that bad boy. Wow. Wow, holy crap. So basically on Twitter, I called out Bitcoin when it had entered this gap. And as you know, in this channel, we only talk about gaps. Can you hear me just fine, by the way? Just confirm with me that you can hear me. This is Bitcoin, by the way. On the stream, it doesn't show. How can I fix that? God damn it. Yeah, so anyways, I called out this gap right here, which I don't know if it's actually in equilibrium or not. It is not. It's just about. It hasn't entered equilibrium just yet. But I called out this gap because it was just huge. It was big enough. And a retracement to a gap like this can offer very good buys, although it's not in discount. I tweeted about this. I told people I'm not interested in buying Bitcoin, but if I was to be, this is where I would buy. And ever since that location right here, where is the tool? Ever since this gap right here, price has been bullish. If we go to the 5-minute on that gap, as you can tell, we've entered, rebalanced just about halfway of the gap, which is actually a very important part of trading. The 50% point. The 50% point, it correlates with rebalancing. It correlates with the equilibrium theory. It correlates with, I guess, filling up inefficiencies in the market. There's different terms for it. But the point of what I'm showing right here is that price went to this gap, and I believe this is at least equilibrium point of the fair value gap. If we get this tool, go here, it's again just about, which isn't always necessary, but this is the sweet spot, 50%. Anyways, yeah, so Bitcoin at the moment, it's already reached a very good point at which you could have traded. We're kind of past that at the moment. I would say if you're trying to long Bitcoin, because here's the thing with trading, right? If you want to participate in longs, you need to obviously buy cheap. There's a little phrase in trading, or a little quote, specifically for crypto, which I don't even trade. I don't advocate for crypto trading on my channel. I don't trade that myself. I don't make videos on it. But if you do want to trade crypto, the best time is when no one is talking about it. The best time to buy crypto is when no one is buying crypto. When do you think price started to rise? It started to rise around here again, right? Which was, well, let's say here. First month of 2023. Do you remember when people started to say that 2023 will be the new bull run? The new bull run for the year? Also, look at that. Monthly gap retracement into a beautiful, right? Anyways, this is how you buy Bitcoin if you really want to invest. And I don't do it myself because I've got other things I'm working on. I could buy Bitcoin. It's not hard at all, actually. But the way that you do it is you buy it when it's cheap. So what does that mean? What does cheap mean? Because some people will claim it's relative, right? It's subjective. Now, analyzing Bitcoin from an objective point of view would mean that you look at the previous price action and you compare it to the current, so you could get an idea of what's going to happen in the future. Most people will teach you order blocks, they will teach you rejection blocks, data ranges, which I've already mentioned in my other videos, right? And yes, you can use those. Yes, you can absolutely use any tools you want. I've never said don't use those things. I've called them bullcrap because that's my personal opinion. But let me explain something to you. In trading, you can use a lot of tools to do analysis, but there are actual good ways to do analysis. In the book Intelligent Investor, I think it's Graham, he emphasizes that there's a difference between investors that do analysis and just people that invest that have speculated. The term speculation has been so broadly used lately, and that goes hand in hand with trading analysis. Yes, you can do quite a lot of types of trading analysis, right? But there are ways to actually get an edge in the market. For example, gaps. I keep saying this in my channel. Gaps, nothing else but gaps, right? I don't use anything else. I used to use order blocks. I can mark them out. This is Bitcoin, by the way. I don't think I've got much else to say about it, so I'll go to EURUSD, and I was about to say that I can mark out order blocks, I can mark out rejection blocks, and it really does not matter. For example, right here, we've got a bullish order block. A bullish order block of which, if you're not aware of, is just down close candles just before a move up or a move down. In this case, there's a move up which has taken out the high of this candle, and that creates an official order block. It's not the cleanest, but it is an order block. An order block can be consecutive candles, so it's 1, 2 in this case, in the 4 hour. On the 1 hour, that will be more probably. Let me see. Yes, but that doesn't matter. We'll look at the higher time frame. So I can mark all of these things out. I can obviously keep them in mind. The most I would personally use is order blocks. You are dropping gems on YouTube. Thank you, I appreciate that. I don't know why the chat is not showing. Let me try and fix it. Maybe now it will show. The chat should show. God damn it. Oh, here we go. There you go. There's the chat. Hello. Hello, Alex. So as I was saying, the most I would personally use is order blocks. And that's mainly because they are right next to the gap in terms of the order of which they are made in. Good morning. Good morning, good morning. It's 9:20 a.m. Good morning. Also, just I apologize for the ads. I don't really use TradingView Pro. I'm not interested in it, so I apologize for the ads to keep popping up. Maybe I will pay for the membership in the future, but at the moment I'm not too interested in it. So as I was saying, because you know that I don't like to waste time, let's just talk about the real stuff, right? In the market, there's this term that has been broadly used recently called fair value gap. And if you want to record this, you can. Take notes, do whatever you want. Back in the day, that term was actually called something within the words or within the terms of liquidity vacuum. What that means is that within a certain point of price, there's a lot of liquidity that can get vacuumed, or just generally there's a lot of liquidity that has been generated, or there's a lot of liquidity that can be collected at that moment. There are books, there are courses I can show you with this, but the whole point is that the reason why I use gaps in the market is because they are the most repetitive, I guess, price action, the most repetitive patterns in the market. I'm still trying to fix the chat. Okay. All right. So the reason why I use gaps is because they've been repeating before ICT was even born. There's literally a book that if you want me to share with you in the future, I will. There's a book that talks about gaps in the market, which was made in 1930. 1930. That's how far this term gap goes. And I know I don't have anything against ICT. I'm not too invested in hating for him. But my point is that the array that he's claimed that he's made is not his. That's the whole point. And then besides that, is the most repetitive, so that's the only one you should really care about. For example, right now, within the range that we're in, if you look at price action for EURUSD, this is the discount area. And I won't cherry pick anything. I've already called this out. I've talked about it in the Discord. I've talked about it to some of you individually, privately. This is a gap that I had highlighted long time ago. I think 2 weeks ago. It's in the 4 hour. On the daily, there's a bigger one, if you can tell. Right? And just pay attention. Focus. Don't lose focus, because I'm talking about things that will happen, right? It's more than likely to happen. Right now, we are in premium. We have hit a gap, which on the daily, it's about the size of that. We are inside of it. I like to use the 4 hour because it's more accurate and allows me to have more accurate room instead of using the daily, which would mean that the whole of price action right now would be inside of that gap. I can use the 4 hour, which allows me to trade more, allows it to be more accurate, etc. Right now, within this price range, which we have located by locating the high over there and the low down here, high, low swing, and a retracement. This is the range that we're dealing with, right? The discount is at the bottom, which is this, and that's where the cheap prices are. This is essentially, how do I put it into a term which everyone can understand? Essentially, this is where people buy. This is where the cheap price is in the market. When you go outside in public and you go to a store, this is where the stuff is the cheapest. You'll go there and buy cheap stuff because you're interested in it. And this is where the seller is. The seller is up here waiting for price to go back up and get expensive so they can sell it more. Now, depending on who you're trying to be that day, which trading allows you to do that, it allows you to be a consumer and a creator. So a buyer and a seller in some way. In this case, because price currently in market has pushed up to an expensive price point within the range, which is this one. Also, yes, you could use different ranges within the range, but at the moment, let's just keep it clean and simple by talking about this one. We are in premium right now. That is a fact. From this swing point to this swing point here, a retracement into above equilibrium into obviously a gap right here, a very specific gap. We are in premium. I already called this out and I've checked this out and I've talked about it, but the video that I made where I explained to you the times 1, 5, and 9 a.m. Just look at this. We have pushed during the time of 5 a.m. into the gap, of which I made a video on. And this isn't me trying to say, look, I told you so. I'm just showing you, right? 9 a.m. reversed. I went all the way down. And this is where the theory that I gave you might work, might not. But I'm just trying to show you. It's likely the price went from a premium array. We're still in premium. A premium array to push down into a different array on the lower time frame. So look. 9 a.m. We'll put a line right there. And then we'll go to the 1 hour. And as you can tell, price created a gap by the time where we finished 9 a.m. and we reversed down on the next candle, which is 10, onto this gap. We fully filled it almost. And now we're just consolidating at this point. So things like this, consolidation and stuff, are caused from lack of liquidity, obviously. But the whole principle of gap to gap has occurred here. It has occurred before. It will keep occurring. And that's why I made the video on it, because in trading, we are trying to find objective repeating patterns. If you don't know what that means is that whether you like it or not, whether you believe it or not, whether you want it to happen or not, you want to find in trading some stuff that repeat, right? That's the whole point. Because if you think about trading consistency, what it means is that you consistently do something over and over again. You repeat something at the aim of making money. Now, here's the thing with trading. You don't need to try and find something that makes you money. That's a factor, or that's a side effect of finding something repeatable. What that means specifically, good morning, Gertie. Welcome to the stream. What that means is you find something that repeats whether you like it or not. So, for example, back before I figured out the 159 a.m. pattern, of which can be broken down to lower time frames, by the way, I just simply keep it brief at 159 a.m. I don't want to talk about everything I found out, because it'll take me days. It'll take me a long time to explain everything I've found out myself. It took a long time to figure it out. It'll take a long time to talk about it. Before I found out that pattern, I didn't think that the market could do such thing. I didn't think that the market would repeat in such an accurate way. Once you find it, which I've already broken it down on YouTube videos. I've already broken it down on multiple videos. And I've shown you how it repeats. It's likely to repeat once it reaches below this gap. Because 50% equilibrium point is right there. The 4-hour gap is right there. If this candle or the next one within, perhaps, you know what the perfect scenario would be in this case? And if this happens, then tweet me at, message me and let me know. 9 a.m. candle right there. If it comes in, rebalances it fully. Maybe does not reach 50%, but it does touch it, or even it goes below it, that would be perfect. It's very likely the price will reverse up. It's very, very likely. And that's the nature of repeating patterns in the market. It's not an algorithm. It's not supply and demand. It's none of that rubbish, right? Let's just assume this, because this is a healthy way to approach the market. We don't know what pushes price. We do not know. We need to stop pretending that we do. As I keep saying, you need to find an objective repeating pattern. That's it. I will never teach you algorithmic price delivery, which, by the way, I can. I've got so many notes on stuff like that and so many lessons and teachings I can give you. But there's no point, because I'd be pretending that I know that price is delivered by an algorithm when I've got no evidence for it. And people think they do. Some people have claimed and have tried to show it. For example, I won't mention any names, but there was a theory or explanation about how price gets delivered algorithmically through clearinghouses, or the clearinghouses process, CLS, I think, or I forgot the full term. But even after someone gave that theory of how price gets delivered algorithmically, ICT came out and said that that's not actually it. So that was the closest someone got to proving the algorithmic theory, and it was still disproven. It was still proven wrong. So I'm here to tell you that we don't care why price moves, right? The people that care why price moves, they're trying to market themselves as someone that knows better than other people. When I promise you, nobody in this market knows better than someone else. Nobody. The only person, and this the only entity that will ever know better than anyone else, the only entity that will know better than you, better than hedge fund managers, better than economists, better than, you know, better than everybody that trades, the only entity that will know that is the market. And you don't know what the market wants. You don't know what the market is seeking. You can have an idea. You can trade based on probabilities, but you do not have a full, absolute, I guess, conclusion of what the market is doing. And the reason why I'm emphasizing this and I'm repeating it and I'm talking in this way is because, look, I want to restart your mind. I want to refresh your mind by teaching you a very different mindset. You don't know shit. You don't know what the market is doing. Okay, Gio, so what does that mean? Then what do I do if I don't know what the market is doing? You're not trying to predict the market. You're trying to trade off of probabilities. We anticipate a move into a certain area which has shown within data and historical events that once it gets there, and I'll try and show you within the stream today. I don't know how to do it. I'll show you my data. For example, my data says that 4-hour fair value gaps are very rarely disrespected, which means the body closes below like that. It's very rare that happens, and that's just one thing, right? The other fact is that they tend to get respected more than disrespected. A lot more. So if we've got that in mind, and we have the term or phrase in our mind, which I've got it left on the left of me, actually, it's noted down. Give me a sec. I've got it on a sticky note. It says, the market is never binary. It is always about probabilities. Always. So now the probability of price pushing away from this gap right here is much higher of pushing up higher, pushing up and becoming bullish, is much higher of a probability than pushing back down. Yes, it can push down. There are other factors and analysis that you can, conduct to be able to predict that or anticipate that. But what we know as a fact is that historically, price will come to certain points and show a move more times than other locations, and that location is a gap. That location is a fair value gap. I mean, you see it here, you'll see it in different places, you'll see it everywhere, you'll see it absolutely everywhere within the market. The difference is the time frame. If you focus on the 4-hour, you'll see it on the 4-hour. If you focus on the daily, you'll see it on the daily. It keeps repeating. My chat's broken. I don't know why it's doing that. I'm not a streamer, so I apologize for that. No one really knows. I'm just reading the chat. No one really knows how the markets move. It's all based on emotions and stop losses. Liquidity, seek liquidity. Facts, time equal more than price. Yeah, that's a fact. Nobody knows, and people that will claim that are just marketers. You guys, I want to tell you, I'm studying marketing. I'm a business and marketing student, right? I'm close to graduating, God willing. I understand marketing very well, like the back of my hand. I've studied marketing, I've studied sales, I've studied communication, all of that. I've got a lot of non-fiction books talking about marketing, and I read them all the time. I've got a basic understanding, and I'm still developing it. When ICT makes videos where he talks about how, like, you made $300 this week, that's so good, and you should think about how that's better than your salary, and that would set you for the rest of the week and the rest of the month. Think about your family and stuff like that. Guys, that's emotional talk. That's emotional garbage. That's bullcrap. When do you ever hear me talk like that in my videos? When do you ever hear me explain stuff like that in my videos? Never. I talk about price action. I talk about what's repeatable and what you can do. I'm not here to boost your motivation, to boost your ego, to give you confidence. Confidence comes from self-applied repetitions of something. I said this to somebody privately. It was something within the lines of, you need tangible evidence to have confidence. It's not going to be a ICT motivation video. It's not going to be a video that you watch on YouTube. It's not going to be any of that. You need to backtest, which I'll give credit. Dave Teaches FX says that all the time, and I agree with him. You need to backtest, collect data, trade as much as you can. Literally spam that button. You don't need to trade 20 times a day. You don't need to trade 30 times a day. Just backtest what you've got and trade it accordingly to your plan over and over again. And then besides that, don't think about how long it's going to take you. Don't think about the money. Guys, I don't even have the dollar value on my dashboard on CTrader. When I'm trading, all I see is pips and price action. I literally minimize the dollar, because what that does to me is remind me, hey, you've backtested this and you've got this data. Whatever you think, whether you think, oh, that looks like a juicy $600 and I want to close it, whether you think that or not, the data doesn't care, right? So what I'm trying to emphasize again is that you do not know what the market will do. So what you can do is the following things I've just mentioned, which is backtest, collect data, forward test, place the trades according to your plan, and use the data as your evidence to give you confidence to keep applying that. So I hope I haven't been ranting headlessly. You know, I tend to do that because I do have a lot of information I've been wanting to share for a long time. I'm doing it completely for free, like actually for free. You know, everyone is claiming that they do it for free. People claim that they, you know, teach for free. But if you ask multiple people in the Order Flow Crew Discord server, they will tell you, or at least at the moment there aren't many testimonials, but I've got a couple of people that I've literally taught personally for free. Like I've got on a call with them, I've explained stuff, and it's stuff that I've backtested myself. So this is all for free. Just take notes when you want. The main thing I wanted to talk about in this video, besides everything I've said, was just gaps and what I can expect for price to do. So as I said, we are in premium. We are in a gap. And obviously price has moved away already. But there are actually different types of gaps. In this case, we don't even have one. There is a very famous one called is it expansive or no, I think it's breakaway, or yeah, we'll say breakaway gap. I think Arjo has popularized it a lot, but that term has been, like I've said before, has been around for a very long time. So a breakaway gap did not happen here. A breakaway gap would consist of 3 candles that are moving away very quickly like this without a struggle. Excuse my drawing, but there's just 3 consecutive candles that are moving away without retracement, without a huge wick like that. So we don't have that at the moment from this gap, which could entail that price is not seeking to go further down aggressively, at least not as of now. Let me just check the news really quick, because news do matter, as I have posted on my Discord server, Order Flow Crew. News do matter. Let me try and sync my... How do I do this? How do I stream? Someone help me. How do I stream? I used to stream for fun many years ago, but I've spent so many years focused on trading, learning about trading, that I don't even... Right. I don't know how to share my Forex calendar, but today we've got the Australian cash rate, which already happened, and Canadian news at 10 a.m., which is for New York. I believe it's for... Yes, I believe it's for New York. 10 a.m. CAD. It's only orange folders. We won't see huge moves today, in my opinion. Or we can, based on how just price moves by itself. But the biggest moves come from red folders, as we know. And today we don't have many after current price point. But like I just explained earlier, the best buys at the moment, which I've used this before, I keep using it. This is Bitcoin, of which if you go to Twitter and you scroll down on my tweets, I called out this gap. And there's been beautiful buys ever since. This is just a normal weekly gap. It's just about near into the equilibrium point. But the point was that it was a gap which you could have bought from. Now, the same thing applies here. Just a different context, I guess, and a different pair. This is EURUSD. There's a gap right there. Equilibrium point of the range, which is the 50%, which, by the way, the reason why we call it equilibrium is because that's the balance point. That's the balance of price. It's where price tends to get offered fair value the most, or at least minimum. So when we say rebalancing imbalances and, you know, fixing inefficiencies in the market, that would mean rebalancing a gap, disrespecting gap, etc. The 50% point is the minimum point you should expect to trade after it reaches into, because it's the starting point, in my opinion, of a rebalancing essentially. So what that means is that within this range, price needs to retrace back down and rebalance into discount, or retrace into discount before pushing back up, typically, right? But once it reaches into 50%, That's where you should start to anticipate such things. That's where you should consider buys. Not here, not here, not up here, definitely not up there. Because if you do that and then you tell people on Twitter that Geo taught you this way, then you're wrong. Don't say that, because I'm not saying that at all. What I'm saying is, once again, discount premium, you want to buy in discount, you want to sell in premium. You know, to some people that's basics, but the basics are what actually matters. Now, I did put a community post where I asked whether you wanted me to teach you macroeconomics or not. A lot of people had no idea what those things were, and that's understandable. Not many people do. I never studied economics. I had to study it myself. The most background I've got in economics would be from Bloomberg. If some of you know Bloomberg, I, through my academic years, had the opportunity to work with the Bloomberg platform. I was trading within the platform. I learned through an educational program called Bloomberg Market Concepts, and through that I learned a lot of things which I already kind of knew. I can teach you guys those things. I can make videos about macroeconomics, which do matter, because during times where price does not seem predictable, all you can think of and use is fundamentals. I mean, if you go back to 2008, let me show you. That's just a little example. 2008 is a date which, well, you can see. This is a date which price action clearly showed just pure bearishness at the middle of 2008 up to October 2008. So a couple of months. This is the 2008 financial crash where everything crashed, essentially. I wouldn't get into too many details. And if you try and go here, whether it is with FX Replay, whether it is with anything, any platform, it's very hard to take any trades but sells, but price also does not retrace into equilibrium a lot. So it depends on your ability, skill, and experience if you're able to trade this or not, but most people wouldn't be able to. And the reason why is because, one, they're not informed of macroeconomics or economics generally, and two, it takes years and experience to be able to trade price action alone anyways. So my point was that I can teach you macroeconomics if you really want me to in the future, because sometimes when price action isn't, I guess, obliging, going hand in hand with the price algorithm, right? All of us know here how much of a price algorithm there is. When that doesn't happen, and I'm joking, by the way, when that doesn't happen, you have to look at macroeconomics. You have to look at the interest rate of the country. You have to look at news and what Powell is talking about, whether he seems dovish, whether he seems bearish, bullish, whether he seems hawkish. What those terms mean is whether he's looking to change the interest rate by 0.25 points, basis points, 0.5, 0.7, whether he's trying to reduce it, whether he's trying to keep it the same. Now, why those things matter is because what kind of economic data can you see here? Nothing. This right here is a reflection of what those news articles and news events and meetups and Powell speeches, the obviously Federal Reserve leader, right, chairman, what he talks about, what the decisions in that place are made. Interest rate is the biggest driver for the currency market. So I would like to teach you about stuff like that, because when you can't determine where price is going to go, you can get a better idea by realizing where the sentiment is and where the sentiment is not. I know I've said a lot. I'm very aware of it. If you do have any questions, I would love to answer them. At the moment, I'm just kind of waiting. There isn't really a trade, to be honest. I'm not sure if I would be trading on live stream. If I would, I'd let you know. When can we start microeconomics? So it's macro. Microeconomics is different. Macroeconomics, I mean, it depends really, whenever you guys would like to. My next video is supposed to be a very long video, or a decent sized video, talking about why traders typically fail, which is something very, very common, something that's very repeatable within failures in trading communities. I can try and do that next time. I can try and mention macroeconomics. I've already made a document in the Discord server, which if you are in, you should go now and download it. I explain briefly how I scope macroeconomics and what I look for, besides the fact that I just use the news to push price. Because there's more than that. There's more than just, you know, oh, red folder, orange folder. Like, it's not just a folder. It's literally a macroeconomical release. It's a news event that has details. For example, which I did detail in the file itself. For example, if the forecast for unemployability or unemployment claims or employment claim, whatever, if the forecast is 200k in the green, which means 200 jobs, 200,000 jobs positions, if the forecast is that and the result comes out at red, so like minus, double that, right? The market will like literally move so much that you've never seen before. And that's a huge difference. Like 300k green, a lot of 200k red. That's just one example. And that matters, which I've broken it down in the file. Most mentors won't mention that. All they mention is, oh, there's a news that's going to happen at this time, so expect price to do this and then go here. And then once that does happen, you can expect it to expand even further down because it's red news and it's a red folder. That's bullcrap. That's literally bullcrap. They're teaching you stuff that is easy to consume because they know that most people won't ask questions. Now, what I understand personally is that what you want to do in trading, like I said in the beginning, first of all, is find a repeating pattern, do macroeconomical analysis, and then you use technical analysis to enter. You can use that to do analysis as well with buys and stuff, but macroeconomics matters a lot. The reason why I use EURUSD, for example, is because it's the most liquid pair. There's a lot of contrasting factors within the macroeconomics of America and Europe generally, which is very good because typically it's very easy for DXY to move up. This is DXY. It's very easy for DXY to move up and allow EURUSD to move back down, which, yes, they are correlated, right? The reason why is because they're very correlated. They're very easily liquid. There's enough participants in the first place to be able to allow liquidity to flow. Besides that, DXY is a safe haven, which allows a lot of investing to go into it during turmoil, during crisis times. A safe haven is a safe spot for investors to put their money into when war breaks out, when times of uncertainty break out. Gold is a safe haven. DXY is a safe haven. I believe the Swiss franc is a safe haven. The Japanese yen, I think, is a safe haven, if I'm not wrong. And it's stuff like that that mentors don't teach you. So the reason why I use EURUSD is because DXY tends to be a safe haven. During times of war, you'll see bullishness in the DXY, you'll see bullishness in gold, because a lot of investors will dump their money into these assets and just try to, I guess, hedge inflation, hedge economical turmoil, like I said. But these things you don't see anybody talking about. So when it comes to anticipating EURUSD for the moment, God, it's hard streaming. It's hard talking all the time. Like I said, the only anticipation of price action in which I could have traded off of at the moment would be this gap right here. I'm waiting for that to get reached. Maybe there is a gap on the 1 hour. I don't think there is. There is a small one. There is a smaller one right there, which typically I like to highlight in red, just to know, because it could also be, it's a double-edged sword having a 1 hour gap within your 4 hour gap. So this is the one, this is the 1 hour gap within it. And yeah, that's the sweet spot of where I would like to get buys from. And like I explained, obviously if price comes to 50% of EURUSD, that's even better. And once we get there, you've already watched my videos, you can see the thing that I wait for, the stage, the entry. I'll break it down right here if I need to. I can find an example. I mean, this one is pretty clear. We have a 4 hour gap right there. And if we go to it on the 5 minute, give me 1 minute. Here we are. This is actually New York. This is the reversal time that I've called out for you guys, which is 9 AM right there. I don't see a retracement, but I do see a stage. Typically, I can enter whenever, really. I don't, like, sometimes I follow my plan completely, and sometimes I just use my instinct, gut instinct, which works, because I've already seen this many times. So clearly price tapped into something. This was during news, I believe. News was back here. Price tapped into something at 9:25 a.m. This is just after 9 a.m. start, which tends to be the reversal. This one was a perfectly played out concept of what I explained. And we see is there a gap? There's a gap here, and the disrespect of that gap happens here. And then you can tell price tries to come back and retrace, but during the rest of the day, there isn't enough liquidity. However, price was bearish ever since. So whether you wanted to swing trade this or not, it would have worked. The typical idea would have been that you take a trade from the first 3 gaps or 4 gaps within the range, which I've explained this. Everyone's watched the videos. If you haven't, then I'll try to explain it here. But essentially that means that there's a gap there. There is a gap there. 2, 3, 4. Those are the max gaps that you should use, because typically past that, it will be past 50%. So this is the first one. The second one got retraced into, and it went above it. And the typical stop loss would be perfect if we entered here. The first gap is obviously the best, which would be right there. The stop loss would be just above the high within the gap. Depending how deep we are into the gap, you can place it tighter, because the theory is that if we are deeper into this gap, we have rebalanced price action a lot more than this. This is just a touch, I guess a tip of the iceberg rebalancing price action. If we are over here, you can have a tighter stop loss because you are assuming that price action has already rebalanced and it won't go above. If it does go above, you're not interested in the market. You want to take a loss, essentially. You want to protect your capital. So this would be the entry. The stop loss would be typically just above the high, 16 pips in this case. And like I've said before, the target, depending on your trading style, it is something I fail to explain and emphasize a lot. Depending on your trading style, your target will depend on that, essentially. So let's see if we've got any clear targets in this case anyways. Within this price action on the 4 hour, there actually isn't a opposing gap. I don't think there is one here, to be fair. So the next opposing 4 hour gap would be here. In this case, it did get reached. That's one of the targets you could aim for, which in this case with that stop loss, it would be a just 1-to-1 really, which isn't the best trade, but the model itself works. And I'm not sure if I've explained it before, but if you want to take trades, you want to at least have a 1-to-1. If you have some sort of a system backed up by data which has more win rate, you can have low RR, because it's very difficult to have a high reward and a high win rate. Those two don't go together essentially. A high win rate comes from little scalps and little trades that come from price action, easily repeatable price action, and then high RRs come from price action that gets repeated, but that doesn't happen very, very often. And sometimes you'll take a loss on it because you're essentially keeping a tighter stop loss, etc. Anyways, in this case, the opposing 4 hour gap with the model I've explained to you did get reached, and it's just a ping pong like I've explained to you. 4 hour gap, 9 a.m. reversal, displacement. There wasn't a retracement entry. The next 4 hour gap did get reached. Watch the videos, guys. It will really help you. Yes, they will. Definitely will. I wish I had a geo order flow when I started trading, to be honest. So yeah, the 4 hour gap did get reached. Easier targets might have been within that area. Let me just I'll keep that there. It's a bit messy. I'm trying to get rid of it, but let me close this for 1 hour. Give me a sec. How would I do that? Yeah, boom. Okay. In this case, once we tapped into there, an easier target would have been this low. In this case, I suppose, well, this low, which does get taken out. The idea is that once you've entered, you need a DOL, which means draw on liquidity. My draw on liquidity typically tends to be gaps. It's much easier for me to target gaps mentally and just based on data. Clearly, you can tell price went all the way down below this gap up to here, down to here, sorry, which was a 2 to 6. This would have been the safest spot, which is just under. It's a 1-to-1 on the dot. If you want to have a tighter stop loss, you can. Just please use data. Is there a gap on the left below this? No. Is there one on the 1 hour below this? I wouldn't be surprised if there is. No. Is there one on the 15 minute? I'm just trying to rationalize price action right now, which I can. I'll definitely do it at the moment. Give me a sec. I mean, there's something. There's something for sure. I'll get rid of this. That's obviously the safest target. We're not disregarding that, but I'm trying to rationalize with you why price have moved even further down, as you saw. That's another 50-minute gap there. This is a very tiny one, which you can tell there's a reaction from. We'll consider that as well. There's 1, 2, and that's about it. We won't go down to the 5-minute, although there will be gaps here 100%. If we go back to the right, I'll go to the 4-hour. We go there. Boom. Look how accurate that is. This is not cherry-picked. I just randomly picked that price action, and you can... What I'm trying to show you is that you can rationalize price action movements through this, which is gap to the 4-hour gap. But hey, there's also gaps below that, so keep that in mind if you want to, I guess, target more. Clearly, price went into that and rebalanced it fully and then reversed away. This is during 9 a.m. That's just an example of my model, clearly working. I do hope that the model starts to work within the live stream time, so within the times that we are recording right now or streaming right now. That would mean price action coming into this gap, preferably even down here, really. But this is one of the examples that I would like to trade from or buy from. That'd be perfect. Give me 1 second. I would like to talk about a lot more topics, because there are a lot of topics that matter when it comes to trading. It isn't just, you know, look at this repeating pattern, trade the repeating pattern. No, because like I said in the beginning of the stream, you do not know shit about trading. You don't know why the price moves. I don't know why price moves. I can't tell you. I can assume and I can pretend I do, and I can market it and make millions from it, right? I know the secret of the market. I can do that. It's so easy. It's so easy. Look at Romeo. Look at market maker. I don't even know his name. Market maker guy, the course selling person, ICT himself. Who else? There's a couple of people that, you know, advertise and market this strategy, this secret. There's someone even on Twitter that's now marketing something called 369 method, which is correlated and linked to Tesla and his theory that the key to the universe is in the numbers 369, and who figures that out or discovers it has the key to the universe, essentially, right? Guys, that is bull crap. That's rubbish. It's just absolute trash. Like, it doesn't make any sense. It's got no correlation to actual financial markets. It's rubbish. Check NQ. Will do. Just give me a second. Give me 1 minute. How do I open it? Here. NASDAQ. I don't really use NASDAQ, so I don't know which broker to pick. I'll pick this one. 369. Yeah, it is. It is an actual thing. And the thing is, 5 a.m. guys. This would be perfect. I don't think price will push today to that because of the fact that we are what? I'll get to NASDAQ, by the way. Don't worry. Just give me a sec. This is doable, actually. It's 12 pips away. It isn't very likely. It's not. I don't expect it, is what I'm trying to say. It's not going to happen, guys. It's not going to happen. I know 100%. No, I'm not going to say that. So, yeah. The 5 a.m. candle just opened. Like I've explained before, we expect a reversal during 9 and further on, which would be hello trading view, which would be this one right here, this candle. So yeah, we'll wait for this 5 a.m. candle, see what it does, how it delivers. I don't like this wick. I really don't. It's reacting off of something else, which will probably be a gap on the left. Ooh, would you look at that? Well, not really there. Let's see. Anything here? Yep, there is. You see this wick right there? If we put the very bottom of it, and you can backtest this yourself, don't listen to me like I keep saying. Bottom of the wick right there into this gap. This gap right, this wick right here actually rebalances this gap fully almost. And this has kept happening actually once, twice, 3 times, 4 times, 5 times, 6 times, 7 times. So NASDAQ, let's look at NASDAQ. I've never really looked at NASDAQ. I don't. Oh boy, that's a very bad broker. Let's pick a different broker. Yeah, let me just explain that. This is just poor price action or price values being delivered. Do you trade futures? No, not really. You looking to short or for price to retrace fair value gap first? I'm not looking to short. I have been taught that you can do that, which would mean that obviously we are in premium and you need to base it upon data. So once we are in premium, there's a gap over here. How likely is it for it to get reached? If it's likely based on your data, you can short that every single time. Just have a safe stop loss, be disciplined with it, and keep tweaking that system, right? I don't do that because I wait for certain requirements to get met, which would be this fair value gap getting reached. And it is also not at equilibrium point exactly. So I would only trade long when this gap has been hit. And if it goes below this point right here, which is equilibrium, like I explained in the beginning, that would be perfect. That's when I would go long EURUSD. But that's me personally. NQ1 is the continuous futures for NQ. Oh, right, okay. That's my bad. I don't really do NASDAQ. NQ1. I'm assuming this is the one you want me to look at. That looks better. There we go. Perfect. I do want to fix the chat though, because you guys keep talking and it disappears. I don't want that. Oh, my trading view is spazzing out. High delay. I don't know how to do it, guys. Yeah, it's here. I think this is it. I think this is it. So, I mean, I can already see a potential continuation after a gap being hit right here. NASDAQ seems bullish at the moment, and the reason is because of this gap. But, oh yeah, we are in premium with NASDAQ as well. So we can highlight a range on the 4-hour right here, but it will look sharper on the daily. This is real futures, but delayed if no data subscription. Yeah, but you don't need. Stick to EU. Yeah, for sure. I agree. But somebody is just wanting me to check NASDAQ at the moment. I don't trade NASDAQ specifically because I have seen that stop hunting and highs and lows do get respected a lot more when it comes to actual moves away from them. So when a low gets taken out, when a high gets taken out, you see a move away a lot more than you would in financial instruments. But like I explained earlier, I like the liquidity between dollar and EURUSD. That's just my sweet spot personally. You can trade these. It's perfectly fine trading. So like I've said in one of my posts, I've made multiple 100% on S&P 500 just from holding it. It's very easy to trade it. But speaking about NASDAQ, if we highlight the range we are currently dealing with, it would be quite similar to EURUSD. This is the very top of the current price action in relative to the left. We don't really have much, but when price action takes out a low like this, you can consider that a market structure shift, but context matters. When price action does that, what you want to do is keep anchoring the high of the price range you are trying to deal with. So what that means is that yes, the high was here, yes, the low is there, but what low has been taken out prior to the current low? So it would be this one right here. Okay, so now after that low got taken out, what's the most recent high within that range? Is this one right here. So this is the range that we'd be dealing with at the moment. If some people disagree, that's fine. If people don't want to use that, that's fine. This is pure backtesting. This isn't my opinion. This is just data. Like, it's a lot better to keep following the range than, you know, keep the high here, and then once we're all the way down here with price, now we are trying to buy. Like, no, that's stupid. Price is continuously moving and you need to flow with it. AMD setup on NQ. Let's see. I mean, AMD is very subjective. You'll see it all the time, but Let's see if I can spot it really. AMD accumulation, manipulation, distribution. Yeah, you're right. And just like I've explained to you guys many times, specifically in my videos, Tokyo liquidity getting swept. And when does it get swept, guys? Do you remember the video when I said ignore the first hour of London? That's from, because of the time zone is 3 a.m. in this chart, but it would be 2 a.m., right? So up to 4 a.m., the first hour at least you want to avoid, and you clearly don't see a displacement within the first hour anyways. After that low gets left, or gets set, sorry, you want to trade the right side of the curve, which in this case, is that a gap? No, it is not. There is a gap here. A gap gets disrespected right there with this candle. This would technically be the retracement after that disrespect, but clearly you can't see that on the 5 minute. There's many reasons to that. But yeah, obviously after that thing happens, we are bullish. I should probably highlight the gap so I can give context. We are in premium, by the way, so you wouldn't want to buy here, but this is a buy setup at the moment. I wouldn't take this, but I'm just being objective with it and I'm showing you it. Into the gap, taking out Tokyo low, displacement, a tiny retracement. It's not a clean one. Some people might be able to trade this on the 1 minute. If you go on the 1 minute, you'll see a gap retracement for sure. There you go. Gap, 1, 2, both of them get reached, right? You can trade that. I wouldn't advise you do. I avoid the 1 minute. I call it a graveyard. I call it a stop loss graveyard. The reason why I call it a stop loss graveyard is because, right, so let's talk about the 4 hour gap. There's a 4 hour gap here. There's a lot of liquidity. There's a lot of stop losses. There's a lot of imbalanced price action. There's a loss of a lot of things, right? Let's go to the 1 minute. What do you know about price action based on just this, what you're able to see on the screen? Within that 4 hour gap, which took hours to make and many price actions within that gap to get created, what can you see here? You can only see from 3 a.m. up to almost 5 a.m., which is 2 hours, right? And you can see minute candles. That's not enough. That's not enough context. That's not enough narrative. That's not enough price action to be able to judge whether there is something above on the 4 hour, like this gap, which needs to be rebalanced more, whether there's another target above, which is like this high right here, you know, stuff like that. You can't see that on the 1 minute. There's nothing. I've obviously marked it on the 4 hours, and now you can see it, but on the 1 minute you can't see anything. You're headlessly giving your stop loss on a silver plate, or a silver spoon, sorry. You're giving your stop loss on a plate essentially. And I don't suggest that. I don't suggest you should trade the 1 minute whatsoever. You should actually use the 5 minute and above only. Even the 5 minute can be dangerous, but it comes with experience. So, yeah. NASDAQ is looking bullish at the moment. We are in premium. The best, and I want to emphasize, the best buys would come from below this point. That doesn't mean that you can't buy here. Like I've explained before, risk tolerance, confidence, and data determines whether you want to take the trade that you're going to follow up with next time or not. It's not your confidence. It's not your current price action. It's data collection and what has actually happened more times than it hasn't. So whether you want to take this trade or not, that's up to you. But if you do, base it on data. So for example, my data says personally that the best trades for buys come from discount, which would be in this case under this 50% OTE. And just below that, would you look at that, there's a gap, coincidentally. Wink, wink, coincidentally. So that's where the best buys would be. Can you check, analyze USDCAD? Ooh, me and USDCAD go way back. Sure, I can do that. I think it's a bit irrelevant analyzing all these pairs, but that's fine. That's totally fine. I can do that. The reason why I'm saying irrelevant is because, well, here's the thing. If you trade USDCAD only, then good for you. That's a very good thing. But guys, you only need one pair. You seriously only need one pair, and I mean that a lot. Most people will use that to market their courses and stuff, and like about EURUSD or USDCAD or crypto. But the reason why you only need one pair, especially a very good one, is because most price actions and patterns will occur across multiple pairs, just differently. And that's about it. So, USDCAD. It's been a while. It's been a very long time since I've met this bad boy. USDCAD is good. It can be liquid, it can be illiquid. The reason why is because they do have a lot of monetary policies that correlate within the economies of Canada and America. They are very internally correlated. I mean, you can just tell from the weekly price action, there's so many wicks. And that's because there's not enough liquidity to efficiently deliver price action and display it in a beautiful way, essentially with candles. Whereas EURUSD, if you go on the weekly, you can see that there's trends, retracements, trends, big candles, trends, right? Because it's more liquid. There's more liquidity within the market. USDCAD has that, and it does have trends, but as you can tell, there are points of which you would get absolutely bullied and stopped out many times. So, and that's talking about day trading, by the way. So yeah. So USDCAD. Someone said, I have small capitals. How much can I take leverage? Please suggestions. Someone agreed with me. Thank you, bro. I appreciate it. That's fine. We'll talk about USDCAD now for the moment. I think I'll take a break in a bit, just make some tea and get like a snack. I'm very hungry. I've woken up an hour ago, guys. So, the question: small capital. How much can I take leverage? Please suggestions. So I think I understand your question. I would like to say, here's my experience, my friend. I used to trade back in the day with $100. I've traded with 300. The most I've traded with like a small account live was around 300 or 500. I see markets provides 1 to 500 leverage. But here's the thing. You can do that. You can trade with leverage. But if you're trying to trade full-time for living in the future, I wouldn't suggest you indulge in such trading activity. The reason why is because leverage is, in my opinion at least, let me not make it a fact like ICT and Romeo and all these hooligans do. In my opinion at least, I don't think leverage is there for your benefit. Most brokers, well, at least specifically prop funds that use a lot of leverage and give out a lot of leverage. Leverage is there to give you a false sense of confidence, to give you a false sense of accomplishment. If you have a $100 account and you use a lot of leverage to turn it into 1,000, and that would mean 100. Is it 100%? I don't. No, it's not 100%. I think it's 1,000%, right? Yeah, I think it's 1,000%. I'm not too sure. I was never great at maths, but I think it's 1,000% of this account, which leads to $1,000. If you manage to do that, that'll give you a false idea of how trading works. Because if you look at the actual changes within markets, look at this. I think, well, you can't see it, damn. Okay, my screen doesn't show it, but I'll tell you. EURUSD has moved 0.07 down percent down today. It's moved down 0.07%. That literally is how much percent it has moved as price. If you use leverage, you can catch 10% of that. You can turn it into 20%, etc. Number one, that's not realistic because price action doesn't move as much as you're leveraging. Number two is going to affect your emotions. You're going to feel confident and you're going to think that this is very repeatable when clearly it's not, because you can see that price action today. And I need you guys to check it for yourself because I can't, I don't know how to stream. Okay. I only know how to trade and teach, right? So check EURUSD. It's moved 0.06. You can see that every single day price will not move more than 2%, maybe like 2% of price action delivery for the day is very, very big for EURUSD. If you use leverage, you'll get a false idea of what you can make and how much you can make based on price action. The reason why that's not good is because some of the best traders, and I will make videos on this, I bet nobody here, or at least most of you guys, don't know Paul Tudor Jones, Jim Simmons, George Soros, Jesse Livermore, which God bless him, he is the profile picture of Order Flow Crew. He's the main man. Jesse Livermore. There's a lot of trading legends. I bet you guys don't know them. But the point I was trying to make is that they don't use leverage. These guys used 1 to 10 leverage at most sometimes. You don't need to use leverage in my opinion. Unless you've got money that you can throw away and you can afford to lose completely. I'm not going to sit here and just talk you into, do what you want, bro, and you can do it. You can, I'm not going to give you a false idea and hope of realistic expectations. If you want to use leverage, you can. If you've got spare money, you can use large leverage and try and flip it. That's the only times that I've advocated for flipping accounts and using high leverage, is when you've made a lot of money on the side trading a plan and an actual large account, and you can now flip thousands of dollars each month for free. Not for free, well, from payouts, right? Or from money that you've made. I don't suggest leverage at all. So, I hope I've answered your question, although I've said a lot. How order flow works. Does order flow move on the basis of COT reports or seasonality? So you're thinking of order flow in a very binary way. A binary way means that something will cause a specific thing over and over again, and that's it. Order flow, essentially, just the term itself means orders and where they're flowing. What you want to know in the market is where orders have been, where orders are, and where orders can go. So this is obviously where you will always be when you enter the market. When you've opened your chart, you will always be here in the middle where orders are, and that's a very important part. Here's the thing, guys, and I'll explain order flow to you using USDCAD, right? Within this range of USDCAD, let's just highlight one, whether it's right or wrong. I'm not too bothered at the moment. So if we go to the 5 minute and we check where we currently are, right? Let me highlight a gap on the left. Of course there's a gap on the left. There's always a gap on the left, guys. Come on. We already know this here, this channel. It hasn't been reached, but this time it did get reached here. Regardless. Probably a 1 hour one. Yes, there is. It has been disrespected. All right, it's fine. So currently we are here. Price action came from down below. Is it discount? Let me see. Can't see. Where are the numbers? Oh, okay. Yeah, so we've moved from premium to premium. We haven't really moved to discount at all. We've stayed within the same range. And the current price action came from a 4-hour gap. So that's, well, the current price action is here, sorry. We came from a 4-hour gap right there, and we disrespected this gap or fully rebalanced it, whatever you want to call it, is up to you. However, on the bigger context right here, and this is where previous order flow, you know, gives you an idea of what price action could do. We've come from this gap here. Again, guys, gap to gap, gap to gap. It will keep happening, right? So this is where context of order flow is relevant. The order flow here applied or implied that we were bullish. And then once we reach this gap, the order flow from there implied that we are bearish. Now, what reference points do we have? So this is previous, what price did. This is again what price did. You can use multiple references for that. What history has done, right? Here, maybe we've been from a 1 hour gap. Let's just not consider that because higher time frame is king. This is USDCAD, by the way. I see market maker sell model on USDCAD. Yeah. I mean, it depends. Yeah, we are in premium, so that would be a very high probability zone to sell from. 50% point is very down below. So, yeah, previous price action has done what I've just said. Gap to the gap up here, and then we move back down. So, now, what reference points do we have in this time frame? Is there a gap up here? No. Is there a gap down here? No. So what do we wait? As a trader, as a professional trader that's trying to take actual mechanical systematic steps, what do you want to do? Do you just buy? Do you just say screw it and let's just buy, hoping for the best? You can do that. You can very well hope for the best. But if you backtest years and years of data and candles and historical price action and economics, I don't think anywhere in price action you see hope. I don't think anywhere in price action you'll witness hopeful mindsets and emotions. You'll only see numbers. You'll only see movements. You'll only see objective price patterns. So what does that mean? Little Timmy here thinks and is hopeful the price will push up, but the market itself on the chart does not have a reference point to actually move away from. In this case, there actually is. So I was kind of wrong right here. I just missed it. It's this one right here. So if price comes into there, you could consider a buy, but we are into premium. So where would the best sales come from? Actually, that's a question. I'll ask you guys and I'll tell you. Where do you think the best sales would come from within this price action right here? If you look at this price action right here, where would the best sales come from? Does anyone have any answers? I do have a 30-second delay, so I'll have to wait a bit. Come on, guys. I've already taught this in videos. You watch my videos. You can do this. Come on. It's very clear. If nobody does it, I'll talk about it regardless. But I'd like to see somebody mention... We can't see the full leg. Okay, that's fine. I mean, you don't need to see the full leg, but that's fine. Here you go. So within this square... Stop, run, purge on that high. Yes. Bingo. So, another billionaire. You are right. This right here is the gap allocated on the 4-hour. The context of which we are playing at the moment is that we are in premium, which, as you can tell, where is it? 50%, 62%. This is a sweet spot. I love the 62% number. And then up here, we are currently just above 70.50, so 70.5%, right? And what is just to that price action, guys? Gap and a beautiful high. Old high, yep. Yep, you guys are picking up now. You're catching up with what I was saying. So, once we reach there, where do we look for a trade? Within that gap. Once again, 50% equilibrium point. So we can do this. Let me try and be accurate. The very bottom of the first candle, the wick of it, and then obviously the top of the third one. The sweet spot for this would be just there. Here's the problem with that. What we can see on this chart right here is based on the Forex.com broker. Now, if I do the same analysis and I put the same tools on a different broker, you will see a different price. That's because just generally brokers tend to display different prices for the same price action. But that's not a huge problem because you can just commit to, for example, I'm committing to Forex.com. I don't change my brokers, although in different brokers, my setup will have met, right? At least as for the moment, I don't suggest that. Once price reaches into there, this is where the best sales would come from, the most probable. Number one is because that's the best balance point and it's the minimum equilibrium point for the fair value gap. And number two reason is because if you do trade above this point, a good stop loss would be more probable. If you trade from down here, you'd have to use a bigger stop loss, right? Because you want to be safe. But if you're up here, your stop loss will be at the same location, but less pips than down here. And that's what you want. You want a good RR ratio, good risk to reward. So yeah, you were right. You got it right. It's just above this high. It would be the best one, specifically because there's also a gap. And this is actually cold. And I remember that kid that said that I'm copying Romeo in my comments. That's just absolute bullcrap. This is called an institutional order flow entry drill. What that means is that this idea and theory or concept of smart money, which I don't use the term smart money, it's not even in my vocab, is the big players, the commercial traders, the hedge fund traders, the central banks, they liquidate and match positions with certain points within price where there's clear stop losses, there's clear limits, there's clear stops, there's clear just take profits. There's a lot of orders. The term stops actually refers to every single general trade type. So limits, stop, limit order, market order, all of that, right? Stop loss, take profit. It refers to all of those. So when I say there's stops there, what I'm referring to is that there's a lot of orders. And what is my name? Geo order flow. And what do we trade? Order flow. So where are the orders? There's orders right here at the top of this high. Where are also orders in this gap that we have located? Where are good orders to sell away from? In premium. And look at where we are in premium. So now that I've concluded that whole analysis and I've given you a literal full plan that you can use. Hold on, slow down. What do you do? What is the mindset you approach this zone with? What do you think when you get to this point? Just sell? Do you just instantly sell once we get there? 20 lot, 100% leverage. No, that's not good. Like I've said before in my videos, like I said in the beginning of the stream, we are reaching for that, by the way, I believe 5 a.m. USDCAD works with the same times. So I think that would mean that EURUSD is actually reaching for the gap that I mentioned in the start of this video, which if you have been keeping up, we've been calling out these things and we've been anticipating them. Anyways, the best way to approach such an analysis that I've just conducted would be by thinking this way. Yes, price can reach into there. Yes, price can give me a displacement. Yes, I can get my confirmation. Yes, I can get my entry. Yes, this can happen. Yes, it's more probable. But, and this but is so important to change the way that you think as a human being, because the things that trading offers as a whole, which is opportunity to trade what you want, however you want, whenever you want, with whatever size you want, that's very contradicting to the way that we are as human beings. So what I'm telling you to do right now is think differently when a certain setup like this, your chat isn't working. Is it not? Let me check. What I'm trying to teach you is to think differently, because once a certain model gets created or setup gets created, you don't want to think that's absolutely... Is it not working? Damn. Yeah, it's definitely working. No, the chat. Why are you lying? The chat is working. What chart is that and time? My EURUSD does. Yeah, so this is USDCAD. I need to fix the. I definitely need to fix the fact that it doesn't show. But yeah, this is USDCAD. EURUSD is here, and I've already done that analysis at the start of the stream. So if you would like to watch that, you can in the beginning. Anyways, USDCAD. So the mindset you want to approach such model and such analysis and such beautiful smart money concepts, algorithmic delivery, all that bullshit, right? Just quiet down. The way you want to approach such a setup is with the mindset that once it does reach there, all you need to do is execute. You're not responsible for what happens. You're responsible for what you do. I was taught this and I ignored it. I was taught this and I did use it and I left it behind multiple times. But after many years, I'm sick and tired of taking stupid losses because I'm not following this. I'm sick and tired of trying to get one of those big trades and big wins so I can have a break and then actually trade properly. Pass a prop and a 300k with 3 trades and 5 trades, huge lot size, right? That's bull crap, guys. That's bull crap. That's the mindset of a gambler, and you need to kill it. The way that you need to think is once, and I've already said it, once you get to this point, all you have as a responsibility is to take the trade, place your stop loss at a safe location that you think is safe based on data, and execute. If you take a 0.5% loss, good. You've just taken a calculated loss. What you're responsible for is yourself, not price action. Why are you expecting this to go down? Why do you want it to go down? Why do you wish for it to go down? To make money, right? But like I said in the beginning, the market does not care. The market finds that irrelevant. It does not care if you want to make money. It does not care if you're hopeful. It does not care if you are excited. At the end of the day, we're trading probabilities, and you can never confirm or absolutely expect 100% of the times a certain probability. Either side can play out. Either side of the scale can tip. Let me read the chat. No, now it's working. Yep. Hey, brother, I have confusion after tapping a daily PDA array. Can enter from on the second time. Can't take entry in second time of tapping the daily PDA array. Right. So here's the thing. Let me answer your question. Well, it's not a question. It's a confused sentence. So the whole concept of like tapping once or twice like this, once, twice, three times, the whole concept of that comes from very old terms, which is support and resistance. You know, we've tapped into resistance once, we've tapped into resistance twice, three times. The reason why that's not efficient, and you shouldn't think of it that way, which I did actually display what I'm about to talk about in my videos, is because price can do whatever it wants. Price can tap into the same thing however many times it wants. It doesn't care about resistance, support. Like, it can do this once, twice, three times, four times. It can do it 15 times, 16. It doesn't care, right? The reason why you don't want to count the times and just trade the probability is because the data is what will show you what you should do, not the tap. Like, if it's tapped 3 times or if it's tapped 2 times, both of those times are irrelevant. Like, the market does not care or count. Oh, we've tapped twice. Oh, now we've tapped 3 times. That's more significant. That's bullcrap. The whole support and resistance theory of a certain place getting tapped more times than not, showing strength or weakness, is bullcrap. What matters is context. So if we've come from a gap down here and we've pushed into this gap right there, that's a delivery. So now we just have to wait for a clear move away before we see a retracement into it, typically, right? The context of what has happened before, like I just said, what's happened before, what's happening now, and what's about to happen, what we can anticipate. That's all that matters. It doesn't matter if price has tapped twice, 3 times, 4 times. Depends on like things like this right here. Give me a sec. Things like this here, or things like above here, or what have we done above there? And before that, where did we come from? This gap here. And then before that, where did we come from? This gap here. That's what matters. The context of previous patterns or previous, I'll just be blunt, the previous gaps. Like, I can say that with confidence. If you check gaps only every single day, that's all you need to check. The context of the narrative from those previous gaps. I appreciate all 30 of you. I did not expect to get this many viewers. What we're doing is just going through some pairs. Currently, we are in USDCAD. You know what I'll do? I'll do this actually, so I can make it easier for you guys. Give me 1 second. Watermark. Oh, should probably make it a different color from the background, shouldn't I? It's not working. Ah, that's why. Okay, here we go. This is USDCAD. I'll make it a little less transparent. More transparent, sorry. So yeah, what we're doing is going through some pairs. Some people have suggested some pairs. Someone suggested NASDAQ. We went through them. I gave them my opinion. The opinion is based on things I've been teaching in my videos. There's nothing different. I will never change it. I will only work on it. The reason why I would never change it, although some things do require developments and changes in the future, is because I've used data. I've also changed my strategy many times, and the origin of how I trade ended up actually being the truth of which I talk about today. So I've mentioned it in a post on YouTube where I said that I actually come from quantitative trading, which means collecting data on Excel and news releases and stuff. It wasn't the best type of trading, but it did make me money, right? And that's irrelevant. But back then, I learned about the liquidity vacuum term. I was using stop hunting. I was using macroeconomical releases. I was using quantitative data to trade. It was a very risky point of time with trading, right? So moving away from that, I started to learn about the fair value gap, not from ICT, from one of his students. I learned about gaps, I learned about all the arrays, and I did my own backtesting, came to conclusion that only gaps matter. Check USDJPY. Yeah, I will do. What's your opinion on EURUSD? I mean, as I said, it's the only pair I use. If you go to my journal, it's just EURUSD. I have traded GBP/USD, so that's pound dollar. Pound dollar tends to move a lot more pips wise, and it's a lot more volatile. It gives me gold vibes, but I use EURUSD because it's very liquid. So yeah, USDJPY. Let's see what we can see over there. Again, I'll use Forex.com. Forex.com, where is it? Here we go. USDJPY. So, just give me a second. Okay. So, within this price action, USD JPY is very interesting because, like I explained earlier on, USD is a safe haven, which means that it's a safe spot for hedging away from inflation and during economical turmoil. Investors put a lot of money into safe havens during those times, like war, inflation. Well, inflation goes hand in hand with war crises, like things like COVID, right? And JPY, which is the Japanese yen, is also a safe haven, I believe. I'm very sure. Let me hold on. Let me just make sure. Is JPY a safe haven? Yes, it is. So I was right. The reason why I'm asking, or the reason why I was a bit unsure, is because I believe the Chinese currency is also a safe. I don't want to say things without knowing for sure, so we'll move on. So within this price range, talking about price action alone, just technical and not checking the macroeconomics and the releases. Let me just check EURUSD really quick. Okay, we still have not reached that gap, guys. This gap of where you would like to buy from has not been reached. So it's also not the best quality gap, like I said, because it is just above 50%, but it is somewhere you could buy from. Anyways, USD JPY. So just like I explained earlier, the basics. Within a price range, you want to highlight the high and the low, left to right, if you're trying to buy or sell, sorry. So what is the high here? Within this price action that we can see in front of us, this is the high. That's correct. This is the objective high. However, in the context of this low being taken out, and then we swing again, retrace into what? A gap. Ooh, surprising. And then we take out this low again, or the next low after that. What is the most recent high after this low? What's the most recent high? The most recent high is right here. So, get the OTE, which is the Fibonacci tool. It's not an OTE. I keep using that, but it's just easier. It's a Fibonacci sequence, right? High to the low, right there. And this is where the range is. We are currently, with US dollar and JPY, the pair, we are in discount. Let me see. Someone said something, I believe. Am I mistaken? Let me refresh the chat really quick. Okay, I pressed refresh chat and it's gone. Here we go. Someone said I'm bullish on EURUSD. I am not bullish at the moment. I'm bearish right now, day trading wise, but bullish overall potentially, yes. I'm not bullish overall right now, just potentially in the future, based on macroeconomics and price action. So yeah, USD JPY, we are currently in discount. We have not entered the equilibrium point, and as you can tell, the equilibrium point is actually matched up perfectly with a what? A gap. Beautiful. There is also another gap above, which you do want to consider. There's also a gap here, which you do want to consider. Now, this is a very common and normal question that I've been asked, which is fine. Like, it's perfectly fine if you ask such a question because it makes sense. Which gap do we use? Right? Okay, so that's a good question. Number one, if you are in premium trying to sell to discount, the minimum target that you would want to have is 50%. So what that means is that if you're trying to sell from premium once it's reached premium, which is here, the minimum target is right there. Now, based on logic, if we enter here, how can we target the same place that we've entered from? It's not the best spot. You can obviously take that trade. I would take this trade up here. It's even better. It's a deeper spot, which is 62%. 62% is very commonly known within the ICT community. You can use that or not. This is an even better spot. But all you would really care about or be interested in is the context. So, the 62% right here has a gap. If we just remove the rest and go onto the daily, there isn't really a gap. This is why I don't use anything but EURUSD. On the weekly, there isn't one either. But on the 4 hour, this gap is above 50% into premium and a 62% point. Now, like I've said in my videos, if you get a displacement from any gap, which is this one here, in the context of, premium and discount, this would be a great displacement. This would be perfect to enter from. You can trade that. If you're trying to be even more professional and trade highly probable setups, the deeper you are into the OTE, that's the better the retracement, which entails the better liquidity has been collected, the more displacement you'll get, or the better of the displacement you'll get. I would personally take this trade. That's where you would sell from in premium. So number 1, we're in premium. Number 2, there's a gap. And number 3, we get a displacement. When it comes to USD JPY, at the moment, that's really all I'd look for, technical analysis wise. Another thing I'd like to do is check currency price strength. So if I go to one, I will put this link in the chat for you guys. I use this sometimes. I need to sign into chat. What the hell does that even mean? Right, give me 1 second. I'll give you guys a link. It's just a simple currency strength chart. I use this sometimes to check and correlate the strength between two currencies. So for example, I will turn off CAD, I will turn off every other thing, and I'll keep on USD and JPY only. As you can tell, USD is on a general bullish trend, and at the moment spiking up a little bit, and JPY has been on a general bearish trend for over how long? Multiple hours, and currently is spiking down. So USD JPY is very likely to push up based on the current price action and currency strength. That's what I entail anyways. On top of that, there is a gap over there. On top of that, this is where equilibrium is. And on top of that, there's probably a displacement away from a gap on the 1 hour, which, yes, there is. It's been disrespected, but we can see that a gap is being potentially formed. There's also an easy liquidity here. You need to keep all of these things in mind. So USD JPY at the moment is bullish in my opinion. The place where I would look for sells, I wouldn't trade, from here to the target. I would only trade from the target. So the point at which we're trying to reach with this currency pair would obviously be 50%. Oh, crap. One of these gaps. So 1, 2, 3, right? And that applies to every single pair, guys. That applies to every single financial market, instrument, pair, futures, indices, crypto, whatever, name it, right? Even if it's an altcoin called Ronaldo, I don't care. You can apply it to anything. The reason why is because these certain things are not algorithmic. It's not an algorithm. It's not the number 369. It's not, what else? It's not turtle soup. It's not a rat soup. It's nothing. It's none of that. It's market mechanics. And I know that sounds fancy, but what I'm trying to say with mechanics is, think of it this way, and let me just break it down because I'm sick and tired of saying this over and over again. In order for someone to sell something, this is a man, his name is Jimmy. He's trying to sell something to somebody, right? How does he sell? How can he sell? How can he sell a product that he's got? What is the only way that this person can make money by selling this product? The only natural way. If someone is buying, let me move his entire face. If someone is buying, right? That's the only way. If this person did not exist, he was never born, or there was never people that bought stuff, this person would never be able to sell, right? And the same goes for buyers. How can someone buy something? Where can you buy it from? Anywhere, like a product, a phone, a service, a house, a car, anything, insurance. How can you buy? How can you sell? If there is someone on the other side of the party to provide you that, whether it is for a purchase or a sell. So for a buyer, you need someone to sell to you. For a seller, you absolutely need someone to buy from you. So, and with that being said, market mechanics mean that if you're trying to sell, you need a buyer. There's buyers here. There's liquidity there. There's a lot more buyers within highs. There's a lot more buyers within equal highs. There's a lot more buyers within triple highs. Those things exist, right? The reason why is because of liquidity. Rat soup. Yeah, I mean, I might as well make my own course and publish it for free. Rat soup, SRT, 369, gold ratio, whatever. It's just all rubbish. It's all rubbish. It's literally rubbish. You'll learn more from studying gaps and studying the premium and discount and backtesting this into a... Also, by the way, which I hope that I can work with them very soon, I will link them down here. Give me a sec. The only backtesting software I use is Trader Casa. I found out about them not a long while ago. This is the trading backtesting software I use. And the reason why is because, first of all, like you guys know, I'm trying to provide free content and make free lessons completely on YouTube at least, right? And one of the things that these guys are doing is what they're one of the only backtesting softwares that are completely free. They offer a free version, and Rat Soup 369 strategy sounds solid. Yeah, I mean it is. You know, I coded it myself, so so yeah, Traders Caster have a completely free version of trading backtesting software. They've also got a paid one, but the free one is completely free forever, and they'll keep it that way. I really recommend them. You should backtest using them. But yeah, all this turtle soup, SRT, internal ranges, it's such rubbish. It's such rubbish. The reason why they use these like SRT or turtle soup or whatever, what else? Golden ratio 369. Like, this is marketable, guys. This is marketable. This is a cool idea that they can lie to you about. They can tell you, you know, my course will give you the key. My course shines the light above the secret of the market. Like, it's just marketing. You are constantly being marketed to. You are constantly being advertised to. If you walk around in your city and you go to town, you'll see adverts everywhere. You'll see businesses with posters. You'll see cars with billboards on them. You are constantly being marketed to. I'm marketing myself, but I'm doing it for free. These people are marketing something and charging it, when here, I'm teaching it to you for free, completely for free. Like, everything you learn here is things that I've paid for, and so it took me years to figure out through backtesting in my own actual sessions. So I don't like to swear, I really don't, but it really does frustrate me when I think of these people. Specifically Romeo, specifically a market maker model guy, I don't even know his name. Those people that sell courses, PDFs, literal PDFs. Oh my god. I've made a PDF. I'm going to make a video on that PDF. I'm going to post it for free. A whole PDF teaching you why traders fail and what to keep in mind, which is extracted from a 2011 course that I studied years ago that has around 900 pages in PDFs. And I'm giving it to you for free. Things that I've studied myself. So, yeah, you can listen to those people if you want to. Some people will defend Romeo and those mentors, I guess, a lot. But what I would advise is that if you do such thing, at least one, commit to what they're teaching you, and two, understand that whatever they teach you as a secret, market secret, is more than likely nothing. Like, it's not a secret. It is definitely not a secret. If it was a secret, it wouldn't be out. You know what I'm saying? Like, it makes no sense. If these people are teaching secrets, then there'd be repercussions. Like, it's not a secret. Someone just subscribed. Oh, wow, that actually worked. See? I'm somewhat of a streamer myself. Welcome to the crew. I didn't get your name. Damn it, I need to fix that. Welcome to the order flow crew. So, I don't know if EURUSD has been a good boy or not. At this moment, we are still pushing down into that gap. I don't think there's a 1 hour gap on... No. So yeah, like I pointed out earlier, that's the gap we look for buys from, typically. And there's also a 1 hour gap just at the beginning of that. You want to keep that in mind. And just like I explained to you, 50% point of the gap, that's where you want to look for the best buys. So yeah, follow that model, follow that logic. Don't expect it to work every single time, because that's suicidal. But in-game, but do understand that these things do work. Do understand that I've got data to back it up, and I am working on it. This is something I'd like to mention. I am working on making this even better for you guys, specifically obviously for me as well. That's just me being honest. This is my trading model that I'm just sharing for free at the moment. I'm trying to make it better for myself and trying to make it better for you. Among those lines, or within the time frame that I'm going to be doing that, I'll be sharing videos, I'll be talking to you guys, I'll be live streaming as much as I can. So yeah, this is actually a perfect time for me to stream, or since I've started to stream, because the gap hasn't been reached. There's no, anything really. Romeo is just messing on media, posting edited profit screenshots, selling 100k mentorship, but still people believe him. I mean, yeah, like I said to you guys, I can repackage so many things. Oh my god, I've got gigabytes of content, mentorship videos, screenshots, data, lectures, Zoom calls, Q&As, notes, PDFs. Like, I've got terabytes of that stuff, and I can repackage it and make courses look so beautiful and market it like a secret and give it a beautiful 4K JPEG of a key on the top and make it look so beautiful. But I'm not going to do that. It's just rubbish. These people are lying. These people are lying and people are paying for lies. The only reason why I'd allow people to pay me to coach them is if I teach them things that I can actually showcase even on a Zoom call, on live stream, which I am. I'm showcasing to you something that I've only just discovered a year or so ago, but I've been trading for 6 years, trading rubbish, right? So once I found out this and I back tested it and I realized, hey, there's something going on here, I'm just live streaming for free. I'm making videos for free. I don't want to put this into PDF. That's rubbish. So, do you have a schedule for live streams like this? I would like to. That's my answer. I would like to. This is my first stream. I would like to stream London AM, which is during this time. I've been streaming for 2 hours almost since 8 a.m. I would like to start streaming 8 a.m. Welcome to the crew, Ztar. Oh my. Okay. I would like to stream every day, but I think on Fridays is not doable for me, but just based on personal reasons, and also on Sundays I can't because I meet somebody. So I will try and stream every day. It will basically just be daily commentaries or daily summaries of price action. So I've been speaking a lot. I really need a break, guys. I need to get my tea, which I haven't had yet. I need to get the snack that I said I will get an hour ago. So I can put the stream on pause. I'll probably lose viewers. I don't really mind, but I'll make some tea. I'll get something to just snack on. I'll be right back. Just to summarize what we've been talking about, this is EURUSD, the 4 hour. We've highlighted the gap. We are currently on the 5 a.m. candle, which is typically the expansion. And then the 9 a.m. Displays the reversal. 1 a.m. has tried to reach into there and failed. So that's why I said based on that context, and also on the 5 a.m. expansion, not expanding as far. And there's a lot of pips between those points. It's very unlikely, but if we reach that point within today, you'll see what I've been talking about and the probability aspect of it. So, on Sunday, I meet my girlfriend, by the way, my beautiful girlfriend, which is watching this stream. So, Peter Whitmarsh asked, when price reaches the 4 hour gap, would you look... Behnam Kiani joined the order flow crew. Welcome to the crew, bro. When price reaches the 4 hour gap, would you look for the same price action on the lower time frame to confirm your narrative? Yeah, of course, every single time. As I've said, I am sharpening the sword. I'm sharpening the edge with this model. So what that would mean is that I'll collect more data on which things are more probable than not. At the moment, like you just said, yes, when you get to that point, you just wait for... I was supposed to get tea, man. Right, so you wait for that confirmation, which is just about there, right? The displacement. That's the stage point of your model. And that applies to everything. That applies to every type of model you can use. Market maker, sell model, market maker, buy model, right? Peter, I'm very sorry for missing your question. My chat is all the way 90 degrees on my right. I have to bend my neck all the way, and I'm trying to focus on the price action as well in front of me, so I apologize. But to answer your question, yes, that's the confirmation you wait for. It is typically a 5-minute displacement within a gap, which, for example, I can showcase you right here. This is a bearish example of it right here. This is the height or the top of the gap on the left being tapped. So if you go on the 5-minute on that point right there, oh, sorry. What is the first gap on the left of that price action that we can disrespect? It is this one right here. Disrespect right there. There is not a gap, but there is a retracement, which in this case would be the what number that I showcased to you, 0.62. And if you put the OTE right there, the Fibonacci tool, 0.62 would be a perfect entry. So yeah, 4 hour gap, displacement through the 5-minute gap. You can use these ones if you want as well, but you typically want to use the first opposing gap. So in New York, 9 a.m. reversal is expected. This is the confirmation, which is the, well, it's not that one. It's this disrespect right here within this gap. The body closes below it. We get an attempt to retrace down, and then we get a proper retracement, of which then demolishes the other direction of order flow. So yeah, 4 hour gap. That's the higher time frame bias. The displacement on the 5-minute, that's the confirmation. And the retracement on the 5-minute, that's the entry. Ooh, I'm on a roll. I'm on a damn roll. I'm talking so much. I've covered USD JPY, USDCAD, crypto, NASDAQ, EURUSD. Right. Just a quick little break. I'll get some tea. I will get something to eat. I'll message back a few people because they're messaging me privately and I don't want to miss any of them. So I'll put right here Superb, thank you. You're welcome. So, where do I put this? Right there. Nope, there. I like that more. Okay. 5-minute break. Be right back. Left at 10:56. Okay. So I'll be right back. Yeah, I'll make some tea. I'll make green tea. I don't mess around with coffee. I don't like coffee. I'll make green tea because I really like it. So I'll be right back.
Think it's the end of the road, won't lie. Feels like the end of the world.
Is this what you're looking for?
Thinking out loud, I've been smoking loud. Cups in the air while I sing for the crowd. Reach for the stars, tell my girl I'm leaving town. But this is everything that I ever wanted. Loco, I've been acting crazy. Ask me how I'm doing, I'ma tell you I'm amazing. I ain't with the snakes, talking about me doesn't faze me. I've been on the run for myself. I am check the diamonds on my wrist. Every time I look at them, I know my life is bliss. Pop pills like it's candy, I ain't talking M&M. She ain't love me back then, now she asking for a pic. I guess this is how it is, how it feels to be wanted. Ay, and she calling my phone. I just wanna tell her to leave me alone. When I'm off the drugs, that's when I'm in the zone. That's when I'm gone. Thinking out loud, I've been smoking loud. Cups in the air while I sing for the crowd. Reach for the stars, tell my girl I'm leaving town. But this is everything that I ever wanted. Loco, I've been acting crazy. Ask me how I'm doing, I'ma tell you I'm amazing. I ain't with the snakes, talking about me doesn't faze me. I've been on the run for myself, I ain't playing. I feel like I'm in the Matrix. Started out with nothing, now they acting like I made it. I ain't Forrest Gump, but I've been running to the bag. And they gon' try to steal my flow because they know I am the greatest. Swear to God, I don't got nothing left to prove. All my friends today, yeah, I've been thumbing through the blues. I know I'm on top and I know I will never lose. I don't got nothing left for me to lose. Thinking out loud, I've been smoking loud. Cups in the air while I sing for the crowd. Reach for the stars, tell my girl I'm leaving town. But this is everything that I ever wanted. Loco, I've been acting crazy. Ask me how I'm doing, I'ma tell you I'm amazing. I ain't with the snakes, talking about me doesn't faze me. I've been on the run for myself, I ain't playing.
Back on my bully, feel like a bully, feel like a boogie, no hoodie. I need the pants so they should be. I pay when I'm ready. She want me, she see how I boogie. I move with the hunters, I'm running and they get in with me. And whole club is getting jiggy. They turn up to Tupac and Biggie. Hot in my city, ain't nobody fucking with me. Back on my bully, feel like a bully, feel like a boogie, no hoodie. I need the pants so they should be. I pay when I'm ready. She want me, she see how I boogie. I move with the hunters, I'm running and they get in with me. And whole club is getting jiggy. They turn up to Tupac and Biggie. Hot in my city, ain't nobody fucking with me. I know they picky and choosy the way that they did them. I could never let them do me. They really slept on the kid and I took they spot. They wanted back, you better move me. I know she ready to roll. They know me before, but now she acting like she knew me. I had to clean up my room. She fly to New York and we make cinematic movies. She finna bring all her friends and they see the bands and now they turning into groupies. I really got hundreds of bands and they want it all, but I could never let them woo me. I got some hoes from the past that said I was trash and now the same ones wanna do me. I really got too many groupies. I mix the Gucci, the Louis, the Chewy. I had to tell them I'm straight out the island. Too much designer, the money been piling. I should have endorsements the way that I'm styling. That boy way too cold, they're like, where did you find him? I had the Chiefs and they had the Niners. You better stop when that boy is on fire. I cannot date her, I just had to try her. I broke her heart, but I ain't no liar. They say that I'm hot, I wanna be hotter. Word of my mother and word of my father. She hard to get, but I still went and got her. She let her show off whatever I got her. I spend bands on all my shotters. Mismatch Balenciaga. All these girls tryna get on my roster. She doing no hands, no flocker, yeah. Back on my bully, feel like a bully, feel like a boogie, no hoodie. I need the pants so they should be. I pay when I'm ready. She want me, she see how I boogie. I move with the hunters, I'm running and they get in with me. And whole club is getting jiggy. They turn up to Tupac and Biggie. Hot in my city, ain't nobody fucking with me. Back on my bully, feel like like a bully, feel like a boogie, no hoodie. I need the pants so they should be. I pay when I'm ready. She want me, she see how I boogie. I move with the hunters, I'm running, and they getting with me. And whole club is getting jiggy. They turn up to Tupac and Biggie. Hot in my city, ain't nobody fucking with me.
Your boy is back. I am back. Let me lower down the music. We've got Trader Casa in the house. Welcome. I didn't expect you to actually join, but welcome. So this is the software. Well, they're actually a human being, so I'm sorry, I don't know how to refer to it, but Trader Casa is the software that I mentioned, and they're one of the only, perhaps the only free software for backtesting. I really suggest you check them out for sure. The gap still hasn't been reached, guys. I think I'll retire now. I think I'll quit trading. We're still waiting for the gap to get reached, so I've got my tea here. I only had a little yogurt. This is very hot. Also, I would like to mention that I did try to set up a webcam in the beginning. I just couldn't. I genuinely could not. I've got a camera. It's a 4K cheap camera. It's not the best one, but I've got a camera. I've got another camera. I've got a normal webcam, and I tried all of them, and I don't think I look at the standard that I want to. I don't know if you guys want to see my ugly face, but I tried to set up for you guys. I tried to make it look professional, and it just wasn't working, so I just started the stream. Anyways, as of for the moment, we don't see any potential trades technically on the chart. As I've checked the news with you guys earlier, 7th of May today, the only news we could have would be, let me refresh the page just to make sure I'm accurate. Yeah, within the next 3 hours or 4 hours, New York time, by the way. In New York, I believe it's 6 a.m. right now. So within the next 4 hours, there will be Canadian IVPMI release, which is an orange news. So Euro GBP is looking good. What do you think? Oof, you've brought me back to my old type of analysis. So yeah, I did used to use Euro GBP. The way that I would use it is to obviously correlate it with DXY and see which one is the weakest. I don't tend to do that anymore. Let's see if it gets filled at the New York Open. That's exactly what we're looking for. I don't know if you are referring to what I've taught, but if you are not, then fair enough. That's exactly what we're looking for. We're looking for EURUSD to push at 9 a.m. and reverse. So it's very good. Euro GBP. So let's see. 4 hour gap. We have reached into one. We've seen a little displacement. Not displacement. We've seen a little move away, but we haven't moved away far enough. We've moved away from here. We are currently in it at the moment. We have moved away from a 1 hour gap right now, so we are trying to deliver somewhere. This is one of the cleanest targets right there. I think this music is a bit loud, isn't it? There we go. So yeah, this we're moving away from a 1 hour gap at the moment, clearly rebalancing it fully and displacing away from it or moving away from it. The cleanest target for this type of move would be there. That's a buy side liquidity. In the context of the high time frame, there's also a high, gap on the left. When it comes to the daily, we've taken our previous day high. There is a daily gap there. In the range, we are actually just in 50%. So Euro GBP is looking good. You are right. Fair value gap. Oh, fair value gap. What would I do without you? Never heard that. Yes, as you talk. Good. Hello, my first time here. Welcome. Welcome to the Order Flow crew. I think someone subscribed and I missed it whilst I was making my tea, because I think we were at 1,071, which, by the way, it's blown my mind. Like, I made the first video just for fun. Like, I record stuff with my friends all the time and have clips of my trades, for example. But then I decided to upload it, and people are just enjoying what I teach, I guess, because it's actually accurate. You're back. Welcome back, Rooks. So, excuse my coughing. My throat is not the best at the moment. On the 4 hour, we have already entered a gap, which I don't like it being red. We have entered a gap. We have displaced down. I think this was... Wait. Euro GBP has different times. So it's 1-5... Oh, no, it doesn't. 159. 1 a.m. Well, it was the previous candle before that. This is why I don't use Euro GBP. We displaced away from that. And then 5 a.m. tapped into another gap. And we actually reversed during 9 a.m. Well, 9 a.m. reversed again because we tapped into the gap that got created. Pushing down into what? Another gap to push up. Oh, God. It's beautiful. Is beautiful. A perfect order block. A perfect order block, right? You want me to find it here, or do you want me to make it? I can try and find one here. I would assume, or I would personally believe that in the lower time frame, they form the most aesthetically pleasing arrays. So for example, let's try the 5 minute. Maybe not with this pair, to be honest. If you have not already gone through a top down, could you kindly do that, please, for let's say gold? Okay, I mean, I do have to end the stream soon, but I can do that, yeah, for sure. And I would like to say that I've already done that across 6 videos already. I've done that multiple times. I will do that today, don't worry. So, okay, let me just break down the first one that someone requested. Someone said order block. So a perfect order block would consist of obviously a down candle or an up candle, closed candle. So for buying, it would have to be oh boy. For a bullish order block, it would have to be a up closed candle, I believe. Up closed candle. I am losing track. I've been streaming for that long. For buying, it would be a down closed candle, I believe. Sorry. So a down closed candle like this. Let me just show you on the chart because I can't draw properly with TradingView. So an example of an order block, as the Majesty himself, ICT, explains it. I'm going to pick a different pair because this pair is terrible. It doesn't look good. Okay. This right here is an order block. This down closed wide candle right here. Let me extend it. That is an order block. An order block is where trapped sellers or buyers are trapped into stops are in it, limits are in it. Just like I've been explaining, it's stops. It's general liquidity. It doesn't have to be specific terms, right? Orders are trapped in there. Once price issues into there, we are assuming that there's liquidity to be collected. A perfect order block would consist of 1 to 3 consecutive candles. If there's 4 consecutive candles, you do not want to consider that. It's too much. Like, for example, and the reason why, for example, here, we have 1, 2, 3, 4, 5, 6, 7. Now, if you consider all of this, that's a huge order block, right? Of which we have entered and it shows displacement away from. But the reason why is because this so-called order block is matched with this gap. Which, that's a different story, by the way. Matching order blocks with gaps, that's a different story. I'll talk about that in the future. But an order block, the reason why I don't pay attention to it too much is because it comes, well, in the matrix array order, it comes before the gap, but without that gap being created prior to the order, there is no order block. And I know some of you are confused, I'll explain. But for example, within a price range like this, we have the rejection block at the top, order block here, gap in the middle, etc., right? But before this, how did this range get created? How was this range created prior to this order of arrays? A gap here, a gap here on the 15-minute, a bigger gap there. See, there's gaps prior to everything. There's gaps in the market constantly that create the future price action. And that's a fact. So I don't recommend you use order blocks, but if you want to, you can. I have a friend that uses them and is profitable at the moment. So depends on you, really. If you want to use order blocks, you can. I personally use gaps because they tell the story better than any other array. The gap has not been reached yet, by the way, guys. And it is Tuesday, so within today and tomorrow, we could expect such a move to be the Judas swing, the manipulation. At the moment, we have taken out Tokyo's low, so maybe we could see a move away from, even if the gap doesn't get reached, but that doesn't mean we should trade it, just like I've explained to you. There is a 30-minute gap, and that's clearly shown movement away, which you could scalp from if you really want to, but I wouldn't suggest so, like I said. Anyways, the gap has not been reached yet. I would still be waiting for that to be reached. Let me read what you said. When I watched your other video, you're marking the order fair value gap as a potential target or potential rejection area, but usually when fair value gap is already filled, it can't become point of interest anymore. It's quite confusing. No, so what I said is gaps can get disrespected. Let me change the song. Gaps can get disrespected and gaps can get respected. For example, this one right here, once we go to it and we are trying to trade away from it, and you should be taking notes, it could either do this and close, or it could either do this and move away. either one is viable, especially if the context is more supportive than the actual price action. Like, for example, if price action shows that this candle closed below the gap, that doesn't mean that price isn't trying to displace up. The reason why is because the market doesn't see candles. Like, the actual huge, large, deep pocket investors and commercial traders don't see candles, right? So what we use the candles for, and the bodies closing below the gap or respecting it, is just signs, right? We are not in a position to know what it does. We are in a position to assume and have logical assumptions. So once the candle reaches into the gap, it can either disrespect it or wick away from it. There's many cases where it's done that, where it's disrespected it, closes there, and the next candle just displaces away. The reason why, let me make sure that I understand. When a fair value gap is already filled, it can't become POI anymore. Well, it can. It's called a claimed fair value gap, and there's different types, like I've said. It can become a point of interest. It's just that you'd usually want to focus on actually managing your trade. Like I said in the beginning of the stream, you do not have control over where price action is going and where the market is going. You have control over what you're doing, which is when you enter here, execute, buy whatever your confirmation is, your entry is, and then put your stop loss to break even as quick as you can based on confirmations. After that, you're not interested in whether the next POI is getting reached or not, because you're going to use data. And if the data says that it gets reached more times than it's not, then you want to focus on the fact that over a year or two, these trades will work more than they don't. So even if it gets disrespected, and I personally have data for this, it doesn't matter, because you can see a move away from them all the time. There is a difference between LIQWE voids. Oh, liquidity voids and fair value gaps. Yeah, liquidity voids are essentially gaps that have not been created yet, like officially. Yeah, that's true. I'm gonna sip my tea for the first time. That is so hot. Oh god. You can't control price, you can only control risk. Exactly. You can't control anything. If Romeo is telling you price is going to do this, price is going to do that, it's not the key, it's not the secret, it's just logic. I can do that, I have done that, and I will continue doing that, but that doesn't mean I've got the secret to the market. It's pure logic. And like I've explained to you guys before, please pay attention to this, right? Focus. It's a different skill to be able to predict the market and a different skill to be able to trade that market prediction. It's very easy to predict the market. Sometimes it's just pure logic. Like when we're in premium, it's very likely that you'll see moves down, which I already called this out. I already called the times in my videos days before, right? 5 a.m. gap, 5 a.m. gap. It keeps happening. It happened, this was 4 days ago? Yeah, it happened 4 days ago, which was Friday, last week. It's happening today at 5 a.m., which is literally today. Well, yesterday, sorry. We can expect it to happen again, even today. It's happened over and over again, and it's not hard to predict a direction from a certain point. It's hard, or I guess difficult, to formulate a plan around that and trade it in a disciplinatory way. So, nice and clear explanation. I really try to. We've got 40 viewers in this chat. Wow, that's crazy. Is there anything you guys would like for me to answer? Because in terms of analysis, this is EURUSD. We've already performed it. I broke down how I called bullishness on this weekly gap on Twitter, and ever since we've seen bullishness. This was precisely where I said you should buy if you are interested. Excuse me. What am I doing? Yeah. So this is precisely where I said at the very beginning of the gap. And if you check, I don't know if I've already done this. I think I have. This is it doesn't matter. 50% point is nearly getting reached with the gap, and this was a very good spot to buy from. By the way, where you're from, I was born in Albania, actually, a very small country that most of you will not know, and I just live in the UK now. So yeah, W viewers for sure. W viewers for sure. Good top down, sir, or bias, whatever suits your death time. Okay, you said gold. So when it comes to gold, it's a lot more volatile because there's a lot more orders and a lot more just investment going into it, constantly up and down, and price is more fluctuating. So gold, I've never tried the model or the concept I explained, but let's just go from we could do monthly, right? So on the monthly, we do not have any reference on the chart at the moment with TradingView, for example. So we don't have much to think of. Typically, however, just a general rule of thumb, this is based on my experience mainly, rather than data. When a new high gets reached, it's hard for price to sustain it. The reason why is because it's pure emotional logic. When people are investing a lot into gold and it's reaching an uncertainty point, which is a new high, there isn't a reference point or a historical reference point to use. People will dump money, they will close their orders, they will sell and stuff like that, right? So we are currently at that. On the monthly, we can see there's no reference point to trade off of. People will likely push price down, so we can retrace. This is the most recent low within this range. So the equilibrium point for gold would be this point right here, which is coincidentally within a gap. If we go on the weekly after that, we can see that we've already done that on the weekly, unlike the monthly. We've pushed down. This candle has already hit this gap right here on the weekly. This week, which was the 22nd, starting on Monday, 22nd of April, already displaced a bit up. So this was an easy buy, as you can tell. This one has shown an easy buy again. Whether it's sustainable or not, I don't know, because like I said, on the monthly is not, and there isn't any price reference on the left to use to predict price going further up. But on the weekly, we can tell that there's a little retracement into the gap. It doesn't sustain up, but it does give a move up. So what I would predict or anticipate is the price keeps coming down all the way to 50%, which is this right here, 2208.21. Right? Please check NASDAQ. I already checked NASDAQ, but I'll check it again. Can you share your Fibonacci settings? Nice breakdown, by the way. Thank you. W streamer, W viewers. Thank you. Right. So these are just the normal OTE Fibonacci settings. I hope you can see it. You can see it. I've got 0, 0, 6, 2, 1, 705, 5, 7, 9. To which, to be honest, at some point I'm only going to have this. Like, that's literally all I need, to be honest. But for the sake of now, hopefully I can turn on the right ones. Yeah. For the sake of, I think I've just broken it. I don't know. Here we go. Right. For the sake of now, I'll keep all of them on. Those are the settings. If you want to take a screenshot, here you go once again. It's just simple OTE. I've also got my own one, which is this. People don't know anything about this, but I'll talk about this in the future. I know it looks crazy. I know it looks silly, but trust me, there's a reason for it. So, yeah, I anticipate gold to keep moving back down as there isn't any historical reason to price action-wise push further up, or at least within the weekly. If we are aiming up macroeconomically and the investors' sentiment seems bullish, we can use price action like this, gaps, which we can buy off of. And this is just a repeat of Bitcoin, right? Like I called it out with the weekly gap right there, buys instantly. Same with gold. And no, don't take that the wrong way. Gold and Bitcoin are not correlated whatsoever. So, this is Bitcoin. Let me do this for you really quick. Here we go. So, we reached the weekly gap. We are not at premium on the overall time frame. However, that is the monthly. So how price works, it's like this, right? OTE over OTE over OTE. So what that means is that although on the monthly we have not reached, although on the monthly we have not reached the, right, let me fix that. Give me 1 second, guys. Jesus, struggling. There we go. Ah, damn it. I think it's black. Yeah, wait. Okay. God damn it. Right, here we go. So although on the monthly we have not reached the discount, the equilibrium point, we can also have a range on the weekly, which in this case would be this one, right? Because it's all an OTE. It depends on the time frame that you're trading or which you can take trades in. If you're trading the monthly, you'd wait for this point to get reached if you're swing trading and stuff like that. On the weekly, you can also use that for swing trading. The 50% point is right here within a gap. And I wouldn't consider buys at all unless we reach this point. Unless we reach the other 50% on the monthly. And then in terms of 4 hour, there's many gaps. Price just kind of fluctuates all over the place. Oops, sorry. So it's not easy to trade gold. It's very risky. But how long do you hold your trades? I have had my take profit hit in 10 minutes. I've had my take profit hit in 20. I've had my take profit hit in hours. In my backtesting sessions, they take 1 day sometimes. It depends. So I'm a mix of a couple of styles, really. The one thing I do want to master is day trading, where I get in and I get out. But my take profits hits different times. So I don't hold my trades for multiple days, at least not yet. 43 viewers, Jesus. Excuse me, just replying to a message. So that's pretty much it with gold. There is a gap on the 4 hour right there. With the context of where we're coming from is another gap, and we've taken our high, and the next low would be here, so we want to be careful. The daily is probably coming from a gap over here as well. We'll be displacing up, or we're trying to. So we want to keep in mind that on the monthly, we are retracing down from an all-time high. So keep that in mind, because when we don't have history on the left, like I said, it's hard to keep predicting market going up. So we've done NASDAQ, we've done EURUSD, we've done USDJPY, we've done GBP. Oh, we've done every pair at this point. The pairs I don't even do myself. Can you trade indices? Yeah, I mean, it's the same thing. Appreciate it. Your channel is very valuable. Thank you very much. I appreciate that. W explanation. Thank you. W is in the chat. How about that? Okay, so I'll leave it off, or I'll leave it at this gap. Oh, well, with this chart, EURUSD. We are not reaching this gap. As I said, I don't expect it to, mainly because there isn't really any good news today. It might do by 9 a.m., which 9 a.m. is in 2 hours. There's still room for price to move that much in the next 2 hours. If it does not, I would not be looking for any longs. If it does, I would. So, yeah. What if we waited for the 4 hours fair value gap in DXY to get it before looking for buys on USD? So yeah, that's a tricky question. I've considered that myself. The thing you want to use DXY for is the room of which you should consider for EURUSD to move. So once price reaches into here, or DXY, this is DXY, I think you can see it. Yeah, once price reaches into this point, you also want to consider that this is not 50%. And like I keep saying, it's not binary. So once price gets here, it's an instant sell. It's just logic and probabilities. So what you'd want to do, consider the most probable outcome, which would be in equilibrium, premium, up here, into the gap. So here's the thing. You can use the DXY to do SMT analysis and correlate it with EURUSD. You can do that. I used to do that. I used to do DXY, Euro GBP, and then pick between EU or GU. I used to do that, but now I just strictly do Euro chart, EURUSD. You can do this, but it does not guarantee that you won't miss out certain thing above or below where you're targeting. For example, in DXY, we've got this gap right here, of which is, let's say, higher than EURUSD gaps, right? Or further away than the EURUSD gap. However, which some of you may not know, we also use US 10-year and 30-year bonds yield to predict the DXY price action, which would be, let me try and find it for you. Here we go, I've got to save TVC. It didn't allow me to save it. Give me 1 second, guys. There we go. So, for DXY prediction, which there is a gap here, for example, 4 hour, we use the US 10-year. We can go even further. US 10-year is not the best price action-wise, but we can clearly tell that we are in a gap in US 10-year already. So we can expect bullishness for US 10-year and DXY bearishness overall, right? And stuff like that. It's just, you can correlate so many things and so many tools with SMT. There's just, I don't think you should. I think you should keep it to one pair, one chart, and master that. You can use tools, you can use that for analysis, but you should never, for example, oh, once DXY gets reached into there, now I should trade EURUSD. I don't believe that personally. I think you can just trade EURUSD alone. But I think that's it, what I wanted to talk about in the stream. So premium and discount is very important to consider. It's the absolute crux. It's very important. It's the whole idea of narrative and context. You can't trade without context, or you would just be a pattern trader, and we're not pattern traders. If you're a pattern trader, you'll be taking many trades a day. Let me go on the 5 minute, right? Let me go on the 5 minute really quick. Look. Gap, gap, gap. Where else? Gap, 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 gap. There's so many gaps, right? If you don't have context of high time frame premium and discount, for example, we're in premium right now, so on the 5 minute, if you try to buy into a gap like this, I wouldn't suggest so, right? Stuff like that is how you avoid trading patterns. Essentially, you want to use the higher time frame context of premium and discount. I did want to say, so ask me any last questions, and I will have to finish the stream. I've been streaming for longer than I thought. The reason why I have to finish and end it is because I have to go gym, and I also do need to obviously do my own analysis. I've done most of it here, but there's stuff that I will do myself as well. I like to read. I need to read, and I need to do some more stuff personally in my life. So ask me any questions and I'll answer them as well as I can. Someone said, could you do an example of a trade that has already played out of those who, why can't I see that, of those who might not have understood? So as I said, most of my videos showcase that already. I can try and find one of my trades on the chart, but if you watch my previous videos, the very first ones, 1, 2, and 3, I think, you'll see the trades that I played out. If you look at the videos where I titled I made a certain amount of money, those are the trades I took, of which I called out on Twitter before they played out. I can do that here. I'm fine with it, but it's been a very long time streaming. It's been 2 hours. I would suggest you watch those videos. You can see everything that I break down, my trade, how much I made, the stop loss, the take profit, how I called it out, the logic. And it's exactly what I talk about here. It's the exact same thing. So what are the most important things to look at when trading? Oh, well, the first question is, what time frame alignment do you use? Like 1 hour to 5? Yeah, okay. 4 hour to 5 minute, daily to an hour, weekly to 1 hour and 4 hour, pretty much. But in terms of like plan wise, in terms of trading a system, it's just doing the higher time frame analysis generally with gaps. So monthly, weekly, daily, 4 hour, and then to scope out an entry and confirmation, it would be the 5 minute. Maybe sometimes 15 minute, nothing else. 5, 15, 4 hour are the main ones. 5, 15, and 4 hour. So the next question, what are the most important things to look at when trading? So the most important things are actually very like absolute. They're not my opinion. It would be having a bias, although you can trade without one. It's very good to have a bias. For example, the daily bias, you can look at the daily candles and gauge, for example, if we hit a gap on the daily, we can anticipate lower prices on the next day, considering we've taken our high, etc., right? Stuff like that. That's daily bias. But to get an accurate daily bias, you need narrative and context, which would mean, right, if on the daily we have hit a gap on the left, which would entail bearishness, what have we done on the weekly, though? What have we done on the monthly? That's context. That's the context of price action. Because on the monthly, for example, we've hit a gap here, disrespected it, and we're still displacing up. On the monthly, EURUSD is bullish, by the way. So, bias, context, and a model, a system of which you can systematically follow, which has steps. Because if you have certain steps that you need to follow and one of the steps doesn't show, you can avoid taking a loss. So bias, context, a system that actually has steps. Obviously other things, you need to backtest, you need to collect data, you need to have a probability outcome of the things that you talk about. Like for example, I talk about the 4 hour gap and getting hit. I have data that shows that gaps get respected more than disrespected. I have data over the times I made the video with, right? So backtesting, bias, context, a system, data, a good discipline so you follow your plan, and maybe some fundamental knowledge over macroeconomics. What's your favorite position? I don't know what you mean by favorite position. I'm not sure. If you mean risk, 0.5%, target 1 and above. I'm looking for sure. So can I still use the XY for confluence only, but not depend on it? Yes. So don't depend on it, because I can give you an example to why. If you get a bias 4 hour right here, let's just use this candle, right? This 4 hour candle has taken the previous 4 hour candle's high and it's pushed down a little bit. If we go in the EURUSD, this 4 hour candle has not taken out the previous 4 hour candle low, right? So you can't correlate them exactly. You can't. It's impossible just based on price action alone. So you want to get a general idea of DXY and just gauge like the thought of there's a gap here, so keep that in mind. If EURUSD keeps going down lower, that would be the reason. But don't mark out the prices here and try to correlate it exactly with USD. I wouldn't recommend that. Do high impact news affect your trades? Yeah, of course. Of course. One of my worst losses is from news, and one of my best wins is from news. Currently, I don't trade news at all, but I wait for them to pass, and they still affect it sometimes. Of course, there's a lot of volatility in there. So, yeah. Thank you. You're welcome. I think that's it. We're getting 2 subscribers during the stream. I'm supposed to record a video, which I will do. I'll try my best to record it today and upload it. Thank you for everybody that tuned in and listened to what I had to say. We did some normal analysis. We had Trader Casa in the house. They showed up in the chart? The chat. I don't know if they're still here. But yeah, I might tweet out some stuff if this gets reached. As I said, that's my interest, my point of interest, the 4-hour gap as always. And it would happen during 9 a.m. We still have 2.5 hours of this candle for it to finish. If it gets reached, anticipate that. Do not 100% absolutely expect it to move away from it, but do anticipate that because it is a very clean gap. Anyways, I think I've broken down everything. I hope I have helped you. Thank you. You are welcome. Thanks, coach. You're welcome. So yeah, premium discount, keep that in mind. The bias for EURUSD currently, even if it is bullish, I would say be patient to anticipate trades with that bullish bias. When it comes to bearishness, you can take trades pretty much anywhere at this point because we're in premium. Don't forget to watch the videos, guys. If you haven't already binge watched it, it's a must. You'll understand it. Yeah, I agree. Like I said, I wish I had a geo order flow back in my day when I started. I've got so, let me actually, you know what? I'll try and show you guys. I'll show you something of how much information I've got. And it's not that I don't want to show it in the future, but it's just, it takes so long for me to showcase everything that I know that I'm trying to summarize it to the most important parts. And I wish someone did that for me for years. Let me try and, let's see if my file explorer, give me a sec. Give me 1 second. Right. So, how do I do this? Here we go. Wait, no, that's the wrong one. That's Streamlabs. 1 second. Nope. Damn it. I don't know how to do it. I'll just make a new window. Give me a second. Right, here we go. So this is one of my folders I've got with information. I've got a lot of zips in here. There's just courses from people. I haven't been through them, to be honest. But for example, these alone are 48 gigabytes. And one of my favorites would be the Order Flow Mastery course. This is my baby right here. This is what started it all for me. This is a course that somebody made in 2011 and they've disappeared. They haven't been around or online since 2018. And this goes to show that I've got a lot of stuff I can talk about, but I just try to break it down into the important parts and what actually matters. So I'll leave it at that. How do I go back to trading view? Right, I'm trying to go back to trading view, but it's not working. It's fine. So, yeah, I wanted to highlight what we've been talking about multiple times. We've already talked about it in videos. I wanted to talk about it here. The chart is not showing. I don't know why. I really need to get used to streaming, really. But yeah, I hope I've given you a good insight. I hope I've taught you something. If you are new, thank you for the people that subscribed. I'll try and stream more. I still haven't drank my tea, by the way. But yeah, anyways, thank you for tuning in. I hope I've helped you. I hope I've taught you something. Oh, I'm streaming. Someone subscribe? What is going on? Right, thank you for tuning in, guys. I hope you enjoyed the stream. I'll try and stream tomorrow. Like I said, wait for that gap to get reached if you want to trade and go long. That's the most probable. Do your back testing, use Traders Casa, and get the full version if you want. They're very good. Have a good day. Bye-bye.
They say that my flow too much, and I got them racks in my pants, and then fuck on my wall. My brody don't go too much, and he won't make fire with that stick, so you better not talk. We play with the pole too much, thank God y'all find me the music, I feel like a star. They calling me old too much, cause I love it up, I'm brand new, and I feel like a boss. God damn, I'm finally a boss. How you playing it, how you playing it? Been in the air, don't know what I'm landing. Fuck 'em and leave, I'm not romantic. Have my cheese, I'm tired of waiting. 30K cash Monday in Vegas. Do 2 M's, I wish I saved it. Shit getting crazy. No more friends, just me and my baby. Just bought a whole Benz, I'm by Mercedes. Come on, let's ride. Send for your best friend. Been stressing since F-Dad. Wish Mary had less time. Wish Apple did too, man. We sliding in suits now. Big 40, no 2-5. They story got 2 sides. Reminiscing about Drew Dine. I wish you had seen shine. Shit be crazy, better keep me going. Just bought 4 woods, about 3 on 4. Check the board, been scoring.
That boy Josh Ray go crazy.
Yeah, it is every day running, go out like it's sassy. None of these niggas fuck with me. For the rush of that bitch, so it's but you trapping. It is every day running, go out like it's sassy. None of these niggas fuck with me. For the rush of that bitch, so it's empty. If he ready, get hit with a 50. Gucci, Louis, Prada, Fendi. Walked in, bitch, I'm drippy. I can't pay for no pussy, not tapping. Ain't no bitch in the way, but you trapping. Gucci on me, a snake. Shopper gon' eat up his face. I'm tryna hop on the way too late. Yeah, okay, on me till I have space. Don't come to the zoo, you get hate. Cook him up, he get baked. Put his eyes on the plate. All this on me, fussy flake. I don't even know a real name, and that bitch on me, babe. Ay, send me what you gonna take. Read for this shit in this bait. For Supreme, little bitch, I won't bait. For the super, my chill like a 8. Niggas breaking the code like a vase. Can't fuck with that little bitch, I heard that's the case. Can't hit this blunt, I laced it. About 5 hours in there, I taste it. We ain't need done fucking, but guess what? I'ma go ahead and call you Uber. Oh, you make us is raining outside. Well, you bet turn your ass to a scuba. I'ma win a little boy, you a loser. And I'm solid, little boy, you a chosen. Yeah, I was born to go in. I'ma fuck on them bitches, they test. It is every day running, go out like it's sassy. None of these niggas fuck with me. For the rush of that bitch, so it's empty. If he running, get hit with a 50. Gucci, Louis, Prada, Fendi. Walked in, bitch, I'm drippy. I can't pay for no pussy, not tapping. Ain't no bricks in the way, but you trapping. It is every day running, go out like it's sassy. None of these niggas fuck with me. For the rush of that bitch, so it's empty. If he running, get hit with a 50. Gucci, Louis, Prada, Fendi. Walked in, bitch, I'm drippy. I can't pay for no pussy, not tapping. Ain't no bricks in the way, but you trapping.
2 shots, you don't give no fuck. I know some niggas that run it up. These runs gon' quack and make you talk. You had a lot, made a whole lot of dough off of scamming. Fuck your bitch from the back, I'm cramming. VVS diamonds, I'm Xanax. Got so high, don't know if I'm landing. Let's take a flight, baby. I'm thinking like Boca Raton. And on the mic, crazy. I send shots through your collarbone. Been in my first dumb shit running. 10 toes, I stay 100. Right from the back of the grab on something down. Thanksgiving, she gon' get the stuffing. But bitch, I'm better than you. Flow hit like Mayweather, it's true. Damn, who's coming red and blue? Fuck it, I'll take both for 2. Cap ass nigga and a rap ass nigga. I know that you been fibbing though. I fuck your bitch, I give and go. On the bitch, so don't make her ho ho ho.
It is every day running, go out like it's sassy. None of these niggas fuck with me. For the rush of that bitch, so it's empty. If he running, get hit with a